Good morning, everybody. Morning, Cav. Morning, Ron. Hello, Miss Jen. Roku, you've been here since yesterday. I'm not sure if you're actually in the room. How's everyone doing today? Good to see you. Good morning, Andy. Nice to have you guys in here today. Um, Man, do you ever think something and you're like, I'm going to say that, and then you forget it? That's where I'm at right now, guys. I had the secret to the universe and it fell out of my head. But that's okay. I think it's going to be a good day. Good afternoon, Miss Jen. Um, what are we going to do today? How about make sure your cigarettes have labels? The fun ones don't, Ron. The fun ones do not. Good morning, Roku. It's good to see you. Um, Allegedly, I wouldn't know. Be taking a dad break? Those are awesome. Those are the best breaks to take. Our dad breaks. I get to take a dad break this weekend. My son's coming in town. Looking forward to it. It's snowing, Cav? Man, it's 46 here, but it's sunny. We should be back up to the 70s and 80s in the next couple days. You know what? God bless you guys that live in those horrible conditions. I don't know how you do it. Good morning, Gary. Good to see you. Um, I couldn't do it. I couldn't do it. I loved Southeast Washington. But the winters are horrible, and I just can't do it. I'm a wuss. Yeah, I didn't have to shovel rain. I love it. All right, guys, let's get going. We're going to talk about patterns that repeat themselves. We're going to talk about being able to create expectations based on those patterns. And then we're going to talk about creating rules to allow us to trade the expectations created by the patterns. And it kind of goes in that order, if that makes sense. And maybe it does and maybe it doesn't, but hopefully it will by the end of the day. But before I do anything, I want to know what's going on with news. I want to know if somebody important is saying something important that other people may react to. I want to know if there is high impact news, if there's medium impact news. I want to know if there's something happening that sets people off that like to react to news. I personally don't trade what the news says. Yeah, 8:30 was rough. Didn't really move. And I broke my rules a little bit. I was in a crude short at 8:30, but I figured that since it was unemployment claims, that shouldn't affect crude oil much. I took a chance on that one. I'm not going to lie. Typically, I don't. Typically, I stay out of the market, especially the financial. Like the S&P, the Nasdaq. I won't trade that during news. But I made an exception today with crude because everything was strong to the downside. And I do like momentum. Momentum for the win. I think we've already heard it once today. But guys, I check this every day and I'm like, okay, what's going on? 8:30 a.m. unemployment claims. There's a lot more of them. That doesn't feel like an election year. And then at 12:15, we've got Medium. Bob Barker speaks about the Price is Right, right? And Uncle Mester, he's going to talk to Morticia and Gomez about Cousin It. Just kidding. I'd like to make up stuff about it. But guys, I'm looking for high impact. I'm looking for medium impact. And your Discord is fine. Your NT is on some Quaaludes. It's not functioning quite as rapidly as it could today. I had some challenges with NinjaTrader this morning too. I just did a full clean out. Guys, I check news every day. Get in the habit of checking it. If you see a red box, it's okay to sit on your hands. It's okay to not trade. It's okay to do absolutely nothing, because I'm going to tell you right now, and it took me a long time to learn this, doing absolutely nothing in the market doesn't cost me anything. But doing the wrong thing almost always does. So we're going to, hey, JW, we're going to focus on how we can give ourselves the advantages of doing the right thing. Um, is it? Guys, one thing that you can do, and if you close all your workspaces, I do this every now and then just to try and get ahead of any Ninja issues, is I run the repair. This is what I just dropped in the room is the install, the NinjaTrader 8 install. And I'll run the repair and I'll go through just in case there's a glitch somewhere. Just in case something got corrupted, I'll do that. And then it's not a bad idea to rebuild everything every now and then. Rebuild your workspaces. Get rid of all the old stuff. Go to the resources page and rerun the indicators and have those go through and just give you fresh everywhere in case something's corrupted. And guys, this is the Nexgen website, and there's a lot of stuff on here. There's a tutorial section. That's what we're looking at right now. The tutorial section is all of your rules. It's everything that you need to be successful. Guys, this classroom literally gives you anything and everything that you need to be successful. I don't hold back. I don't keep secrets. And I don't pull punches very often. I have way more fun celebrating victories, but I will always point out challenges that may adversely affect you. I'll always point out challenges, ways to do things better, and I have the same expectation. My brother is my coach. He's my education room teacher, and he'll do the exact same thing with me. But I'm not going to lie, I get a little butthurt every now and then. And I think we all do. Uh-oh. My glossary of common terms is gone. That's weird. Um, let's see if it's in the software user guide. Good morning, Termy. There it is. Glossary of commonly used terms. Guys, we're going to talk about really everything in here. So if you're brand new with me, I'm looking to see if I have any newer people. Grant, good to see you back in the room. I am a glossary, but sometimes I'm not here, Ron. Sometimes I'm off being a human, maybe a dad or a husband or something like that, and you guys need answers. So glossary of common terms is a great place to look. And the most important one for everybody, I think, in the beginning, and stress in the beginning because, guys, you're not going to be where you are. Good morning, Muser. Good to see you. And accept that right now. In a month, you won't be where you're sitting right now. You will be in a better spot. You will be a little further advanced. You're going to see things more clearly. Um, and it all is going to stem on your ability to read charts, your ability to look at your indicators and understand what they're telling you, guys. And I want to talk about a high probability trend trade. I talk about this every day. This is my first hour. I'm pretty lectury in the first hour. I get that. But we're talking about a trade where each indicator on every chart agrees with the rules for the trade. And this is when the triggers are the strongest and when no termination conditions exist. And when life is pretty happy and everything is good and it's easy, that's the trade that we're going to talk about. And we're going to do that because it makes you a chart reader. And I say this a lot, and we talk about expectations. And I had a fantastic picture sent to me this morning that said, hey, Mark, I'm looking at this and I'm thinking about that. And what they didn't realize was that they were literally just reading their charts. And without having rules for a trade, they were still creating these expectations based on the patterns. You know who you are. And it was a brilliant read. And it was, man, I'm thinking about the long trade here, but everything is red. And then we go into the read and it's like, oh, this is a pattern that repeats itself. This is the expectation from this pattern. This is the distance that I have to get to that expectation. Could I create a rule to close that gap? And guys, that's chart reading. Understanding where the market is likely to continue, using that as an entry point. Understanding where the market is likely to go. Getting paid at that point. And guys, I put this in the room today, not to brag on a win, but when you know that Fibonacci support is where that market is likely to go, when you know that none of the triggers are below it, when you get paid at these points and you watch these little spikes and fluctuations, guys, I'm going to tell you, you feel like the bee's knees. You're like, wow, I'm kind of a big deal. I knew exactly where that market was likely to go. I've seen this pattern. What a great place to get paid. And then you'll also understand where the market is likely to stop, which means that you're going to have the ability to look at your charts and say, wow, I shouldn't take this next trade. This is an area that could create a bounce. This is an area that could reverse the market. This is an area that could create a fight between the people that are in charge. And if you accept that right now, and Ron, we're going to Norbert because it feels like a Norbert kind of morning. If you accept right now, day one, that you're not the person in charge, if you accept that there's people with more money, there are AI robots, there are people that literally have millions behind them. And these are the people that control the market, and these are the people that create momentum, and these are the people that do all these great things. Go ahead, Bob. Is it in your picture? Is it a need to cover it right now, or is it an after we discuss rules picture? Or are you typing one out? That's okay. We'll get it. Guys, these are the people that do everything that you can't. These are the people that make it go. These are the people that make it stop. These are the people that fight. And I want you to just get that mindset that you're a remora. You know what, Termy? It's not Siva. Siva understands his place in the market. Siva understands that when this guy creates momentum, Siva trades with it. When this guy, is it about your chart, Bob? And I ask because what we do, great. So great question. Fibs change color. So Bob, when we get to termination conditions, I want you to pay very close attention because, and I'm going to go through it. I'm going to answer that, and I'm going to direct it right at you so that I make sure that it's 100% clear. But when we get to termination conditions, I'm going to do a little something that's going to make you go, oh, well, that's easy. And then we'll be great. But I don't want to get ahead of myself. So guys, be a remora. Be this little dude that lets him do all the work, but still thrives, right? You don't need to eat the entire tuna that this guy ate, but if you get a chunk of it, you're good for the day. And this is one of the most helpful things in the world, guys, is just know your place in the market. You're not in control. You'll never be in control. But what you can do is read your charts and understand where the market is likely to continue, likely to go, likely to stop. And then you can create trades based on those expectations, rules that have been proven to win more than they lose. And then the final thing is trade management. Is your first 20 to 30 days with me will be focused 100% on trade entry precision because that's when management becomes easy. And then management will follow. I need you guys to do two things. Well, the first thing is ask yourself, do I really want to be a day trader? Do I really want to be a chart reader? Am I willing to put the work into it to make it happen? If the answer is yes, well, then here's your path. Post your trades in class. Use that spreadsheet that I give you every morning. Post your trades in class, whether you win, whether you lose, whether it's just a question about what you see. Get in the habit day one, and if you haven't since day one, start the habit now. Guys, I want you to blast this room with every question, every trade, every problem, every success. Let me celebrate with you. Let me help you grow. It's like a private session every day. All you have to do is jump into the room, drop your picture, and tell me how you read the chart. Mark, this was my read. And because of my read, I took a trade here. And because of my read, I exited the trade here. And guys, I'm not going to beat you up. I'm going to redirect you if you need redirecting. But we're going to look for the good. We're going to try to work through the bad. And we're just going to kind of work together to get you where you want to be. And the more you post in the room, guys, the quicker you're going to get the results that you're seeking. The second is use your spreadsheet. Man, people, for whatever reason, they feel like this is too much work. And I don't know why. But this spreadsheet, and I just dropped it in the room. It's at the bottom of the chat box. Your first tab is a copy of your tracking, guys. This is literally your trade journal. This is what I did today. This is how I felt. These were my advantages. And then look, this was the feedback from Mark. Mark's whole job, 15 hours a week live, is to give you feedback on anything that you present. But you need to go back tomorrow and ask yourself, what worked, what didn't work, what felt easy, what felt forced. And you're going to begin to recognize these patterns that are bringing you success. But more importantly, and this is a very, very key part to what we do, guys, is you're going to begin to recognize the patterns that are taking that success from you. We have all traded in determination conditions, and we've all lost doing it, but we've got to see that enough to believe that that's not our best course of action. We've all traded without momentum. We've all broken rules, guys. If you try to make someone believe that you haven't, you're kidding yourself, right? So what we do is we go back and we study, and we set ourselves up for the day. Yesterday, I traded with momentum, and every time I had the best of the best momentum, I won the trade. So I'm going to commit to that momentum today. And every time I lost momentum and traded into areas, well, I lost those trades. And I'm going to commit to not doing that. And I had a picture posted in the room yesterday afternoon, and I'll tell you what, I got 32 flavors of giddy about it because this was someone that took the feedback from the classroom and said, you know what? I recognize this pattern. This is a look that makes sense to me. This is a trade that I need to avoid. And man, Gino, rock star, taking those NASDAQ lessons. But if you never post in the room, if you never ask questions, you're not going to get those lessons, guys. There's so many great lessons that come out of your questions. So use the spreadsheet, track these things, look at them, learn the patterns, ask for help, do all this stuff, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. That's all we're going to do is we're going to learn rules. It really does, Gino. We're going to learn the rules for when you have advantages. We're going to learn the rules and what the patterns look like. And guys, you've got to learn them so that they become easy. You've got to take pictures every day so that they become easy. You've got to take pictures of trades. You've got to annotate those charts with what you're reading so that you can go back and fix mistakes and repeat successes. You've got to use that spreadsheet. You've got to study what you're doing, guys. And you've got to keep it simple. You don't have to. You do. Yeah, I'm just going to tell you right now. You have to. You have to keep it simple. Because simplicity yields results. It always has. The process yields results. And guys, that's high probability trend trade. This trade that typically wins 70 to 80% of the time. This trade that creates confidence through the memory of success, guys, it only happens on 2 charts. But Mark, I saw John Novak using 3 charts. I saw John Novak using 4 charts. Siva uses a chart with different colors. Ron doesn't use anything but 2 charts. Guys, more information isn't always better, right? More information isn't always your best bet. The easier you keep it in the beginning, the easier it is to find these trades. So we're going to use 2 charts for the new users. Ron, I'm blushing. Your large chart is a slow-moving chart. Your large chart is this freight train rolling down the tracks. It's hard to stop. And even when they hit the brakes, you don't always see it. But the most current bar on the large chart will define direction, momentum, and areas. Your first 2 rules for a high probability trend trade are met on the large chart. The large chart, let's go back to the picture real quick. That's what the large crowd wants. That's what this guy wants. The large crowd creates momentum. The large crowd establishes direction. The large crowd reacts to those areas on your chart. Your large crowd leads the way. But there's also a small crowd. There's always a small crowd, right? That guy that had to be first. That guy that wanted to fight the momentum, the trend. Probably wears a leather jacket and smokes cigarettes out by the schoolyard, right? But what they do is that small crowd gives us the ability to refine using a small chart to pinpoint where the market is most likely to continue, to use this point so that we can reduce our risk, so that we can maximize our profit potential. And guys, these 2 charts are going to give you everything you need to be successful with this software. As you learn to read them more efficiently, you may add more information. But these 2 charts are used for only 3 rules to give you a trade that typically wins 70 to 80% of the time. 2 charts, 3 rules to create confidence, right? A trade for the brand new user, for the high probability trend trader, is the idea that momentum, clear path, and an entry area result in the trade. Nope, Rob, you don't need to know what the 13 means. You don't need to know what the 5 means. Guys, you don't need to know what causes the background to change colors. You don't need to know the math that goes into the moving averages. You don't need to know the formula for creating divergence. Guys, you do not have to be able to build a watch in order to tell time. You engineers hate that. You engineers want to know everything. But I'm going to tell you right now, guys, if I have strong triggers, which give me the advantage of momentum, and I have no termination conditions that give me the advantage of a clear path, and I locate where the market is most likely to continue and have the advantage of entering there, it's a trade. That's it. Yes, we do. Oh, Bob, are you an engineer? Spreadsheets for everything, right? I have to buy a refrigerator. Man, let me make a spreadsheet. Our father was an engineer as well, electrical engineer. Jerry, you can have 12 spaces open at the same time, but you won't be able to see them at the same time. The only way, Jerry, that you can have two workspaces, two different markets up where you can see both of them is if you, let me show you real quick because I will forget to answer this question. You'll have to come to the tab at the bottom and click the Add New Tab, and then you can have one on each tab. I personally don't care for that. I think it's messy. You can have multiple workspaces open. So for example, let me show you. When you look at my workspaces, I have crude oil, Nexgen or E-mini, and gold open right now. So what I do, and Ron he jumped ahead of me to the next solution. What I do, and this is just me, and what I do doesn't have to be what you do, is when I bring up a chart, if I hold Shift F3, it'll toggle in between the workspaces that are open. And for me, that's an easy bounce in between. What some people will do is they'll build a workspace and the 6 open charts are 2 different markets. And you can do that. You can build as many charts as you want so that you can see them at the same time. I know my brother does that sometimes. Yeah, there's a million ways to do it. Me personally, because I'm not as smart as Ron, I don't care to look at 2 markets at the same time. I like to look at a market, see if my rules are met, and if they're not, well, then I'll toggle to a different market. But if I'm watching 2 things at the same time, my brain starts to wander, and I'll piece them together and create a trade that doesn't really fit my rules. So you'll find what works best for you, but there's a million ways to do it. And if you need any help with that, let me know. So guys, we're going to trade rules. Either rules are met or they're not, which means you either have a trade or you don't. For the brand new user, if you don't have momentum, a clear path, and an entry area, you don't have a trade. You need to sit on your hands and do nothing. As you grow with the software, as you begin to become a chart reader, you might find yourself void of one of these advantages. And if you do, you're no longer a high probability trend trade, you're a medium probability trade, which means that most of your indicators are going to line up for a trade, however an issue exists, which means that you're going to have to manage a bit assertively. And your chart reading will allow you to do that. So what you need to do first and foremost is be able to identify these 3 concepts at a moment's notice, and that just comes through repetition. So we're going to start with strong triggers. The only way to have strong triggers is to trade with the direction that has been established by the people that established direction, guys. And if the background on your large chart is green, the market's going up. You should only be looking for rules to be met for high probability trend trades long as you learn to read your software. If the background is red, the market's going down. We should only be looking for rules to be met for high probability trend trades short. And I mentioned the colors not only to give you the direction, the advantage of going with the people that are moving it, but the only way that you can have strong triggers is if all the colors match, guys. And if they don't, you don't have momentum. And if you don't have momentum, odds favorable, best of the best strong triggers, well, then it's okay to sit on your hands and wait. But strong triggers in an uptrend means that the smalls and the large are both green. The small triggers are these solid lines. Bob, I have no idea how they come to be, but I do know that when my solid line triggers break above my dash line triggers, the large triggers, that space between the 2 means that I have strong triggers. These two, separation, guys, the gap between the two says, hey, Mark, guess what? The odds are favorable for the market to continue up. Sure. Rob, remind me towards the end of class. We'll go through it. I know I've done it quite a few times in the last couple of weeks, but sometimes it takes a second to stick. So after we get through rules and we start getting into it, let's talk about how to use the spreadsheet. I love that. That's a great idea. Don't let me forget. In a downtrend, when the background is red, guys, the smalls have to be red. They have to be wide. They have to be angled in the direction of the trend. The large have to be red. They have to be wide. They have to be angled in the direction of the trend. But when I have this look, when I have that gap between the two, guys, the odds are favorable for the market to continue down. And you're going to hear this in the room all the time. Odds favorable momentum. Odds favorable momentum. And when I have it, that's the best time for buying support on a smaller, faster chart if everything is going up. And if everything is down and it's strong, that's the best time for selling resistance on a smaller, faster chart. You guys are going to see it on a large chart as a tail or a wick, whichever you want to call it. But on a smaller, faster chart, it's literally going to be that push from the small crowd. You're going to be able to pinpoint where that's most likely to happen. You're going to be able to pinpoint where this wick is most likely to form. You're going to do that on a smaller, faster chart. So you're going to use these wicks in a little bit to study historically, to go back and see these rules being met. Odds favorable momentum is the best of the best, guys. This is the one that if you said, hey, Mark, there's one advantage that you can never give up. Of all the advantages, of all the patterns of everything, there's one advantage that you have to have every time. Which one would it be? And for me, it would be odds favorable momentum, guys. When you have a market that is pushing strong in a direction, it's hard to stop it. Odds favorable momentum can break areas. Odds favorable momentum can cover mistakes. Odds favorable momentum can push a market just indefinitely. But odds favorable momentum doesn't last indefinitely. Sometimes it begins to weaken. And you'll see this the first time when one line of the small triggers works its way inside of the large. It's literally a visual that momentum is slowing. And you're saying to yourself, this is awesome. I can't wait to sell Fibonacci resistance. But now I'm losing that awesome. So if I'm going to try to sell Fibonacci resistance, I better make sure everything is cool, right? Because I'm losing my advantage of momentum. And then you get what we call weakening of the large triggers. Guys, when the smalls work their way inside of the large, that momentum's going away. This is the first sign. You can see it. It's slowing. It's weakening. And when I have these weak triggers, anything can happen up or down. And if I had $100 and Rob said to me, hey, Mark, $100 bet, pick a side. Do you want odds favorable or do you want anything can happen? Who's going to take anything can happen? The only person that will is the person that's bored, is the person that missed the best trade, that missed the second best trade, and they're feeling desperation and they're just feeling like they're being left out. And guys, that's when people trade without momentum, not because it's the best trade, because they're bored, because they're worried about missing a move. So stick to that odds favorable initially, guys. Weak triggers, that's when things bounce. And they bounce on the large chart at areas. And that's going to be rule number 2. You're going to be able to know whether or not you have a clear path. Does everybody see on the large chart, first bar, the background is green and I know that it's going up? And it's pretty easy. If it's going up, I should be going up with it. The small triggers are above the large triggers. There's space between the two, and that gap lets me know that the odds are favorable for the market to continue up. My large chart in one bar has already defined direction and it has defined momentum. Now I need to make sure that I'm not trading into a termination condition, that termination conditions are false, because what that does for me is it gives me room to my targets. And when I have room to my targets, guys, I have a clear path. That's my second advantage. So a trade is momentum via strong triggers, and then a trade takes that momentum and couples it with a clear path on the large chart, guys. And a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of that Fibonacci area and the T3 triggers, strength and location. The triggers that give you momentum or tell you that it's gone will also help you understand when these areas have broken when they have the potential to break, or when you just need to sit on your hands and do nothing. The areas that we're looking for on the large chart, guys, and these areas are where decisions are made. This is where the people in control may buy, they may sell, they may exit, they may enter, they may fight for the next 3 days, and you just don't know. And these areas are Fibonacci support and red Fibonacci resistance and yellow 1-to-1s, cyan divergence low lines, magenta divergence high lines. And guys, each and every one of these areas is where a decision is made. And each and every one of these areas can stop the market cold. And I took this picture this morning, and I want you guys to see it, because we're about to learn about termination conditions. And if you just believed in rule number 2, you didn't get caught up in 3 hours of consolidation in the NASDAQ. You didn't form opinions. You didn't hope it would go up, and you didn't pray it would go down. You just sat on your hands and you said, God, these jerks, someone needs to win. And guys, eventually someone did. But the buyers and sellers had clearly defined areas, and they were fighting in between them. And Nexgen users don't have to get caught in these areas. You don't have to get caught in these ranges. You just have to believe in one little simple recipe. And you won't believe in it initially, guys. You're going to have to go back and study this and develop trust. But after price reaches an area, in this case Fibonacci support, all you have to do is ask yourself, where are my trigger lines? And if your trigger lines remain above support, or just so we hit both sides of the coin, if price reaches resistance and the trigger lines remain below resistance, guys, it's a termination condition. So Jen, to answer your question, if price reaches one of these lines in no specific order, and the triggers remain above, or the triggers remain below, it's a termination condition. And it really is that simple. And there's 10 of you right now saying, but Mark, these yellow dots may not be as strong as a blue line, and a fat blue line might be stronger than a thin blue line. And maybe a divergence high doesn't carry the same weight as a thin blue line that's surrounded by white dots. Guys, if you reach a line and the triggers remain above, it's a termination condition. Rule number 2 is not met. You don't have a clear path. We'll get there, Haji. But this is what I want you guys to do right now. I want you to give me a why in the room. And don't give me a why in the room because I asked for it. Give me a why in the room because you understand that if price reaches an area and the triggers remain above that area of support, no more short trades. Your advantage is gone. It can be that easy. And then, guys, the area isn't broken until both the small triggers and the large triggers get below the area. The area is not broken until both the small and the large get below the area. But Mark, it turned red. Doesn't matter. Who asked that question? Was that Bob? Yes. So Bob, my path isn't clear until small and large get below. That's it. Guys, there's math that makes things change colors, but I want you to see this. And I'm going to make it, we're going to go hot pink 80s again, and I'm going to make it fat. And that's that Fibonacci support, and it's bright pink, right? Doesn't matter what color it is. When price reaches this area and the triggers are still above, I can't trade into it. And no matter what color that fib is, until the small and the large get to the other side of it, I don't have a clear path. The area is not broken. I don't have nothing in the way. Does that make sense, everybody? It can be pink. Whoops. What if I make it white? Oh, same rule applies. Maybe orange. No, same. Until the triggers get below it. Both triggers. Guys, it is not a clear path. And don't be fooled. by things changing colors on you, right? Let the triggers dictate whether or not the areas are broken. And then Haji says, but Mark, let's get some stuff off of here. What if one trigger passes through? Right, Haji? This is what we're wondering. But Mark, what if one trigger passes through? What if one trigger gets below? Well, Haji, this is what we call a 50-50 look. And I'm going to show you exactly. I'm going to pull up a picture that gives you 3 scenarios at areas. 6th candle from the white box. 1, 2, 3, 4, 5, 6. Right here, Rob? This is the large chart, Jen. Large chart defines areas. So, Rob, let me go back to the 6th. How many triggers are through the area? Are both? Don't care about the price bars. The triggers define, guys. The triggers define, not the price bars. The price bars will clear. But the triggers have to clear. Does that make sense? And then Haji says, what if one gets through but the other one hasn't, Mark? What if, watch how I do this, 50% of my trigger lines break through the area? Exactly, Rob. Only one trigger's through. And what if 50% of my triggers remain above the area? Haji, I've got an answer for you. The first thing is that whichever trigger, if the small triggers go through, I want you to embrace this language. It has to smash 2 to 3 points, unless it's the NASDAQ, and then it's really 4 to 6 points. Smash, not eke, not peak, not almost or barely. Does that make sense? Smash. So right here, I'm not even looking. But right about there, I'm thinking about it. Smash, 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 smash. Cool. So 50% above, 50% below. And guys, this is what we call a 50-50 trade. Getting ahead of me, Haji. This is what we call a 50-50 trade. A 50-50 trade means, and this is the other key part of it, with odds favorable momentum, strong triggers, right? This area has the potential to break. Does that make sense, everybody? They've got to be wide. Guys, weak triggers don't break areas. Strong triggers have the, well, they can, but it's rare. Strong triggers break areas. Strong break areas with ease. Guys, there's got to be a gap between the two. And what we have here is 3 possible scenarios. You've got absolutely no triggers through. And this is a termination condition. This is an area that may stop the market. Guys, that word may is key, right? I may make a bad choice and call Rob a name, and Rob may punch me in the nose. It's not guaranteed. Rob may forgive me. He may let me off the hook, right? But if I'm like, hey, Rob, you're a jerk, I have to understand that that potential is there for him to punch me in the nose. So I'm going to call him a jerk 10 times. And if he doesn't punch me in the nose 7 or 8 of those 10 times, I'm going to feel pretty comfortable doing it. And that's all we're doing, guys, is we're saying that this area may stop the market. It may reverse the market. It may create a challenge, a fight, something that messes up my good time. But when both the small and the large clear on the large chart, guys, there's nothing in the way to create a bounce. There's no reaction point for the people in charge. For the brand new user, these are your 2 best bets. And then the next one is the small smash through. the large lag behind. This has the potential to break the market. But I want you to see the area is not broken. And guys, if the area is not broken, here's your rules again. If the area isn't broken, you don't have a clear path. Are you with me, Haji? On that 50-50 look, if the triggers aren't through, I don't have a clear path. And if I don't have a clear path, guys, doesn't it make sense to insist on having momentum? And doesn't it make sense that your entry area is perfect? And it's no longer a high probability trend trade, guys. It's no longer a trade that typically wins 70-80% of the time. It's a trade that has to be managed aggressively, and you need to be a chart reader to be able to do that. And Haji says, but Mark, sometimes the smalls get through and the large even try to, right? It's still not broken, Haji. They've extended, they've exceeded the area. So even if it goes up from here, Haji's asking about a good top or bottom. Mark, what if it overruns? Is it a good top or bottom? Guys, a good top or bottom is a termination condition that reverses the market. A good top or bottom for you brand new users, let me get it for you. For you brand new users is a no triggers through. It goes back to the recipe. It is a no triggers through termination condition. And when that termination condition reverses the market, it becomes a strong top. And a strong top is the precursor to the highest probability trade you can take. In real time, you can see two triggers through, Rob. You can always see two triggers through. The difference is, will you wait for it? Here's the live market in crude oil. Did those large triggers break through? Hell no, they didn't. This was an area with the potential to break, and it didn't break, did it? Do you guys see that? Where's my small chart? Hold on. Oh, look at that. We're going to talk about divergences. 1, 2, 3 divergences, 3 losses of momentum without a clear path. Remember we just said, hey, if I don't have a clear path, I better freaking have momentum. Divergence is a loss of momentum. And look at that. If you guys took that long, you just got your ass kicked. But I got rules to keep you out of this trade. I promise that I do. And if you did just take a beating on this trade, guys, I really hope you'll pay attention for the rest of class, because I'm going to give you a rock solid plan to never take that loser again. But first, we have to make sure that everybody's good. If price reaches an area and the triggers don't break, sit on your hands, guys. You've lost the advantage. You don't know if it's going to push all the way back to support. Good morning, PC76. You don't know if it's going to push all the way up to resistance. The only thing that you're sure of is that if price reaches an area and your triggers don't break, guess what? You've lost your advantage of a clear path. It really isn't difficult. Trust it. Believe it. Go back and study it. Hold on. I'm going to pull up a large chart again, because I want you guys to see this. Price reached support and the triggers don't break, and it bounced all the way to resistance, and the triggers didn't break, and it pulled all the way to support, and the triggers didn't break, and it pulled all the way to resistance, and the triggers didn't break. Egads and little fishes, you guys didn't have to get caught in that. All the way to resistance, triggers remain below. All the way to resistance, divergence high, triggers remain below. 1-to-1s, triggers remained above. Guys, look at this range-bound market. Rule number 2 told you exactly what you should or should not be doing. And I'm telling you right now, guys, if you're not scrolling back and developing trust in the idea that these lines can stop the market cold, you're doing yourself a huge disservice. Because these things are freaking gold. And 60 to 70% of the time, they're going to screw up your good time. Does that make sense, everybody? I hope so. But if you wait for a termination that none of the triggers have gone through, not one's eked through, gotten through a little bit, poked through, but none of the triggers have broken through, and it reverses the market, that's a strong top. And if from that strong top you get odds favorable momentum and a clear path, guys, Sell Fibonacci resistance on that smaller, faster chart. It's the best of the best of the best of the best. This is where your advantage lies. Not into resistance with no triggers. Not into support with no triggers. And look at where the large triggers are, ladies and gentlemen. This is called the gap theory. If your large triggers absolutely positively refuse to follow the move, if they're more than a full bar away when you hit an area, whether it's a fib, a mid-band, one-to-ones, divergence highs, divergence lows, that market is likely to close the gap. This is what we call a pattern. This is a pattern that repeats itself darn near every day. This is a pattern that tells you that any short trade that you take between here and the closing of that gap is more likely to get run over than not. The gap theory is designed to keep you from taking that short trade. So we're just recognizing patterns right now, guys. We're just recognizing instances where our indicators tell us no more trades. So once again, I just want to make sure everybody's good. If we reach an area and the triggers don't break, if they stay above support, we're not going long, not going short into that area because it may, might, could, has the potential to stop the market. It has the potential to reverse the market. It has the potential to create an untradeable bounce. This is a huge safety net, ladies and gentlemen. If the triggers get to the other side, the area is broken. It doesn't mean that there's always a trade. It just means that you have a clear path. And if the smalls smash, but the large are lagging, there's still maybe an opportunity if everything is perfect. But exactly, Rob, this market is railing. I mean, best of the best momentum. Life is good. Holy smokes. And it hits one-to-ones. And this is where, Rob, in the moment, right there, in that second, what you do, oh, I hate it when it does this. Hold on. There we go. Is all you have to do is say, hey, Rob, where are my triggers? If they are above, I'll be like Fonzie and just stay cool for a sec. That's it. Because they're above, I'm just going to relax. I'm going to wait. I'm going to see what happens. And what you guys are going to find is that more often than not, it's going to create some sort of bounce. They have to in this room. Notice that the bounce goes directly to resistance and all the triggers remain below. That's a termination condition. So is that. And then when it pulled back, my trigger lines don't match. I don't have odds favorable momentum. I can't go long or short. And I can't go back into resistance. And I still don't match. And nothing's broken. And this one had the potential. But look at that. There's a mid-band. And the large triggers are a full bar away. And I can't do that. And I'm not going short. Not against momentum. And guys, this is your 90%. And this is the hardest thing about trading, in my opinion, is doing absolutely nothing when there's nothing to do. And this happens, guys. This is real. Check it out. This happens in real life every day. But what you can do is you can say, I don't have advantages. I'm going to choose to do nothing. I'm not going to lose $1,000 on my opinions. But if I hang out and I wait, eventually everything gets above, right? And then, Paul, do you notice how it turned blue before the large triggers got above? But the large triggers said that the path is clear. The smalls were outside of the large. And guys, you got in at Fibonacci support on a smaller, faster chart. You bought it. And you carried that momentum, that clear path all the way up. And this, ladies and gentlemen, is your 10%. And this is only for the high probability trend trader. Because what happens is there's medium probability opportunities in there. But this is the best of the best. This is the easiest, guys. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence. This is the trade that if you just wait, exactly, Rob, you knew exactly where the market was likely to go with all that momentum. Pretty cool, right? So if you don't give away $1,000 here, then you're doing great. But if you give it all away on the trades that you shouldn't be taking, guys, it becomes difficult to make money on the correct trades. And I don't see traders that have challenges catching this. I see more traders that have challenges avoiding this, if that makes sense. And this is why we trade rules. We trade rules because if you can convince yourself from day one that your only option is that your rules are met and then you'll take a trade, what you find is that life becomes a little effortless. Life becomes very smooth, very easy. You're trading life anyway. And I'm going to start saying this because I've had this conversation with a couple people. Most of you have daily goals around $400 to $500, right? $200 a contract, $250 a contract. That is your daily goal. Pretty easy. You don't need more trades. Just take the best trades. And guys, sometimes the market turns from nowhere, right? I don't see this on a large chart. Even with odds favorable momentum, I don't hit an area and the market drops and you're like, oh man, I should have taken this long. But the reality is there's one more termination condition. But before we talk about this, is everybody cool? Price reaches an area, the triggers don't break, sit on your hands. Small and large get to the other side. Let's look for rules to be met. Keep it simple. This is a termination condition that you're going to see on the small chart. This is a termination condition that smaller, faster refinement chart is going to give you the heads up that your path is no longer clear. And 3 divergences in the same price range may terminate the trend. Once again, we see that all-encompassing word, right? May. It may terminate the trend. It might terminate the trend. It could terminate the trend. Well, if all those are potentially possible, I don't have a clear path. I'm losing my advantages. So what is divergence, guys? When the market comes down and begins to push back up, right about to the third bar, if there is a loss of momentum, if the buyers stole momentum from the sellers, you're going to see a negative number in a blue line, or go into the upside. If the buyers pushed up and right around the third bar, the sellers have stolen momentum, you're going to see that negative number. You're going to see a magenta line. All it means, and I don't want you to overthink it, all it means is that momentum didn't follow price. It just means that momentum didn't follow price. It's the first indication that things may be slowing down. The negative number on your small chart means nothing. It has nothing to do with anything. It's a byproduct of the calculations that run behind the scenes. But when it prints and when the line forms, you have divergence. Price doesn't reach this line. Price creates this line. If that happens, 3 losses of momentum in the same price range, 3 times that the market loses momentum, on a smaller, faster chart, this is a termination condition. Rule number 2 isn't met. You don't have a clear path. This may terminate the trend. It may create an untradeable bounce. It may create a push that ruins your good time from a low or from a high. And the thing is it becomes even more powerful. And you guys remember this from our trigger line lesson. Remember, your chart reading takes you to the next level. If I have anything can happen triggers, smalls inside of the large, and 3 divergences, it becomes more powerful. If my third pivot is higher than the previous, if my third pivot is lower than the previous, I get a head and shoulders pattern, and that adds power. So 3 on its own can mess up your fun. 3 with weak triggers makes it more powerful. 3 with weak triggers and a head and shoulders, more powerful still. Guys, this is the only indication on a small chart where I'll say to myself, rule number 2 isn't met. This is the only time a small chart's ever going to tell me that I don't have a clear path. Because I use lines on a large chart to define problems, I'm going to use lines on a small chart to identify entries, guys. And I'm going to do that after the rules are met on the large chart. So here's your snapshot right here. Guys, I mean, one bar on the large chart says that we're going up. 1 bar on the large chart says that I have odds favorable momentum. 1 bar, the highest point of that bar has not reached Fibonacci resistance. My rules are met on a large chart, guys. Everything says that it's going up. I've got odds favorable momentum and nothing to bounce off of. I'm going to turn my attention to a smaller, faster chart. And this is where rule number 3 comes in, guys. And rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I am going to let the small crowd fight the large crowd. And because this is nothing more than a pattern that repeats itself, guys, this is a pattern that repeats itself on crude oil, the S&P. It happens on the Russell. It happens on soybeans, feeder cattle. It happens on Tesla, Apple stock, Bitcoin. It's just a pattern. And the pattern that brings me success is that the small crowd creates a pullback, a little retracement in price counter to the underlying trend. I am going to wait for that pullback with a limit order at an area, fibs, midbands, yellow 1-to-1s. But here's the key. They have to be inside of trigger lines. They have to be, for the new user, the best of the best is inside what we call favorable large triggers. Favorable large triggers mean that your large and synthetics on the small chart are overlapping. They're one on top of the other. The tighter that they are, the smaller your window of opportunity becomes. Your window of opportunity is where the market is likely to continue. These moving averages, guys, are where I expect price to correct to. Plain and simple. I expect price to correct to the moving average. But a moving average isn't enough to stop a market in most cases. So we put these fibs, these 1-to-1s, these reflections of what has already happened, creating the potential for it to happen again, guys. And when I put a fib, a midband, a yellow 1-to-1 inside of triggers that are overlapping on that small chart, I can take all that momentum and I can buy low at Fibonacci support on a smaller, faster chart. And I can take everything screaming down and I can sell high at Fibonacci resistance on a smaller, faster chart. And I'm able to do this because what happens in 1 bar on the large chart happens in 15 to 30 bars on the small chart. And the very bottom of this most current bar, that's the beginning of my pullback. That's where the small crowd starts fighting. But look at the large chart. It is just screaming to the downside. Odds favorable. Everything says down. Market's cranking. And on the smaller, faster chart, some yahoos try to go up. Thank goodness. Because they push all the way up to resistance inside of favorable large triggers. And right where it ricochets and starts back down, that's this tail on the large chart. So I'm not trading tails on the large chart. I'm not waiting for tails to form. I'm literally pinpointing on a smaller, faster chart areas of support inside of favorable large triggers. I wait for the reversal bar. And at the time of the reversal bar, I say, where are my triggers? That's the red box. And I remind myself, my trades don't come from triggers. My trades come from areas inside of those triggers. So I see a mid-band and I see yellow 1-to-1s, and the cyan box represents where the market is most likely to continue. This is how accurate you can be. You activate a limit order a tick or two above that highest point because the large chart says odds favorable momentum up. The large chart doesn't have anything to bounce off of. I don't panic about one divergence on the small chart. If anything, that little loss of momentum gets me back to my entry. I don't worry about the small triggers turning against me because the reality is momentum is defined on the large chart. Guys, your first 30 days with me should be used to identify where the market is most likely to continue, because once you can do this, the world is your oyster, because what it means is that you can look at your indicators and you can identify momentum in a moment's notice. And you can identify weakness instantly. And you can identify when it's a termination condition. And you know when it has the potential to break. And you can also see when it's broken. And guys, this little bit of chart reading, when you can look at your large chart and say, I have odds favorable, I have a clear path, let me look at a smaller, faster chart and define an area of support inside of favorable large triggers. And this is where my trade originates. This is where great things happen. And you can go back and study this, guys. Go back and study these tails. Look at your smaller, faster, or look at your large chart. Circle a tail. If it comes back to the area of support or resistance inside of favorable large triggers, guess what? You have a high probability trend trade. This is your look. This is the one that you should take this picture. Let me get my picture taken. Get a picture of your large chart. Get a picture of your small chart. Talk about the advantages that are in place. Talk about where you got in and why you got in. Talk about where you may get out. And then once you have it, guys, share it to screencast and open up that spreadsheet. If you took the trade, put it in your copy of your tracking. If you were just studying and you drop it in the room and I say to you, absolutely, this is the best of the best, guys, drop that link into your favorite looks. You're building a trading plan. You're creating recognition through repetition. And if you're not sure, go back and compare it to one of these 300 client trades on the final one. But this trade, guys, this look, it's not a wish to go up. It's not a want to go up. It's not a hope that it goes up. What it is it's a pattern that repeats itself every day on every market. This is a pattern that is predictable. And what you're saying is that with this look here and this entry here, this is a trade that's likely to win 70 to 80% of the time. So what does that mean? That means that you're going to lose 3 out of every 10 probably. But the beauty of the methodology and building trust in the entry, guys, what it does for you is it lets you know where the market shouldn't go. Your window of opportunity is exactly where the market is most likely to continue. Sometimes it's a tick, sometimes it's 10 ticks. But 4 to 5 ticks beyond that window is where the market shouldn't go, and that's where your initial stop gets placed. And guys, you're going to take perfect trades that lose. You're going to take trades with every advantage that don't win. But what you can do is you can manage it effectively and efficiently, and you can keep your losers smaller by putting a stop outside of the window of opportunity. And then once with all that momentum and a clear path, 7 or 8 times out of 10, it's going to give you a reversal bar in the direction of the trade. You can reduce your risk even further, 2 ticks above a reversal bar, 2 ticks below a reversal bar. And with this management, with this simple management, understanding where the market is likely to continue, it's not uncommon to see Nexgen users take the perfect long, reduce the risk, and maybe take a 2 or 3 tick loser. The first thing you look for on a chart, GI, watch this. Let's go through it real quick. Let's open up a live market. What do you guys say? The first thing that I look for is odds favorable momentum. So GI, my background is red, but my triggers are green. I don't have odds favorable momentum. You want to know what the kicker is? I'm done looking on crude oil. I don't have a trade as a high probability trend trade user. But here on the S&P, the background is red, so I'm looking for smalls below the large. I'm looking for a gap between the two. GI, this is odds favorable momentum. This is a market that's likely to continue in the direction of the trend unless I reach Fibonacci support and all of my triggers remain above. Rob, do you see it? So GI, even with momentum, this says, let's pause for a second. You don't have a clear path. Guys, this is the most basic approach to chart reading. First, it's momentum, and then it's the path. And then once you see whether or not the path is clear, you make a decision on whether or not you should turn to the right and look at your smaller, faster chart. So GI, I've got weak triggers, not strong triggers. None of them have broken through the area. Do you see how I don't have momentum or a clear path? And that's what I want you guys to get, is sometimes your best bet is to not do a damn thing. And let's see if we can find, here I had odds favorable momentum with the potential to break. Okay typically means that you don't see it, but you don't want to be put on the spot. And here my triggers were so wonky that there probably wasn't a trade. So I scroll back and I look again. There's another one. Odds favorable, it hasn't reached Fibonacci resistance. And this one happened to pull right back to those triggers, right to that mid-band. So what I'm doing is I'm creating trust in the idea that momentum is a kicker, right? I'm creating trust in the idea that areas have the potential to break, and I'm creating trust that my best chance of success is the area right there at those trigger lines, because the trigger lines are a correction point. And then as you grow with the software, sometimes When a great termination gives you momentum, even if it's trading into an area, you'll start to know when it's okay to bend your rules a little bit. But for a brand new user, it's no trade. And all we do is we keep going through and we keep looking at these tails with momentum. And we say to ourselves, it had the potential to break. Did it give me an entry? And it pulls right back to the mid-band, right back to resistance, right inside of the triggers. So all we're doing right now is we're saying, well, anything can happen with weak triggers. And it did. Look at that, full reversal bar. And we're saying to ourselves that without momentum, this is a tough look. It's hard to go long with my smalls below the areas, with my large struggling. Maybe I'm better off waiting just a second. And then we say, oh my gosh, thank goodness I didn't go short because look at the bounce, right? My rules aren't met. And guys, all you have to do initially is keep it very, very simple. Keep it kind of glued to the idea that it's three things that get you into a trade. And GI, the easiest way to recognize these, let me go into the final thing before we talk about management. Without a full bar, what do you mean? Without a full bar where? Without the triggers through the area? So check this out, GI. A trade is made up of three components. I think is the easiest way to say it. A trade is made up as three components. The first thing is strong triggers. That's the first rule that has to be met before you look for a trade. Strong triggers is defined as a separation between the small and large. It's a big gap between the triggers when all of the colors line up. So this is the first lesson. Guys, we're eating an elephant here. You got to do it a bite at a time. So GI, go back and find 15, 20, 25 pictures of strong triggers. And if you do that, you're going to be able to identify the advantage of momentum at the drop of a hat. I promise you. I've been teaching people to do this for years. But here's the thing, is there's an opposite, right? So I want you to do this as well. I want you to go back and I want you to take 25 pictures of weak triggers. And I want you to write on your chart, these triggers are weak. I've lost my momentum. Anything can happen. And what happens, GI, is you start to recognize the advantage, but you also begin to recognize when the advantage is gone. And that's key to finding success because your brain's going to try to talk you into taking weak trigger trades as a brand new user. And then once you have those strong triggers, you need to know whether or not you've reached a termination condition. So this was one chart. We did this in class. This is one chart over an hour. And we could identify 1, 2, 3, 4, 5, 6 termination conditions on this one chart. And then you have to write on there, these are termination conditions because price reached the area and the triggers remained above support and below resistance and don't have a clear path. And what happens, GI, is you start believing that termination conditions can spoil the party, even with odds favorable momentum. And what it does is it keeps you focused. It keeps you focused heavily on the idea that without a clear path, the likelihood of success goes down and it's okay not to take the trade. And then once you have momentum, once you have a clear path, well, then you just got to go back and find your entries. You've got to study those entries so that they become easy. And I'm going to tell you right now, if you keep it simple, you'll be finding great entries within the first week. If you stick to the idea that it doesn't have to be difficult, if you don't chase all the trades, you can do this. But here's what happens with new users. And I'm going to throw this out there, and you guys know who you are because we've all been there. New users, let me find it real quick. What new users tend to do. Where is that one? Here we go. New users tend to skip learning the foundation because they see other people finding success outside of it. So for new users, one of the biggest challenges that you're likely to have is when you see older, more experienced users taking trades that don't fit the rules and you want to do what they do, but you don't have the chart reading skills yet. So you have to build the foundation. And for new users, I'm very conservative with the rules that I provide you. I'm very conservative with the plan that I put in your hands because it's one that optimizes your chances of success. So I want you to build the mindset that if I don't have momentum, I don't have a trade. And if I do have momentum but not a clear path, I don't have a trade. And if I do have momentum and a clear path but not an entry area, I don't have a trade. And I want you to just start embracing that idea that if your rules aren't met, there's no trades, right? But what happens is as you grow with the software, you begin to see things, you begin to recognize patterns. And what you'll find is that, well, I don't have the best momentum, but I do have an entry area and a clear path. I'm willing to take a shot at the trade and do it. So GI, I say, and this is just me, and let me tell you right now, I've made every mistake known to man, that if you go through historically and you find 25 pictures of strong triggers and you annotate separation between the small and large, this gives me the advantage of momentum. The odds are favorable for the market to continue up. And you type that out on every one of those pictures. By the 25th picture, you'll believe that that odds favorable momentum is likely to push the market in the direction of the trend. And if you take 25 pictures of weak triggers and you say, with this trigger look, the market is likely to stop. The market is likely to reverse, to retrace. By the 25th picture, if you go through the effort of typing that out, I promise you, you're going to begin to believe it. And then you start taking pictures of both triggers through areas, and you start taking pictures of terminations. And the whole idea is that recognition comes through repetition. And it's not just taking the pictures, right? Annotate with the whys. What does it mean? So when you take a picture of a termination condition, right on that chart, price reached the area, triggers didn't break, let me sit on my hands. And eventually what happens is you start to believe it. Man, that's not my trade, nor is that, or that. So what I'm going to do is I'm going to embrace the idea that all I have to do is be able to identify these three concepts and then piece them together through practice, through repetition, through feedback. And that's when you get in. And if you do this, guys, you're going to piece it together and you're going to be absolutely floored at what an amazing chart reader you are. But even more so, George, is that you're going to be absolutely floored at the patterns that you start to recognize outside of this very basic 101 chart reading. And you're going to start recognizing things that you never saw before. You're going to start to go, oh, wait a minute. Every time there's weak triggers and it's not from a key area, it's likely to go to that mid band. And then you get guys like JW in here that say, guess what? I just formed a trade with this level of momentum to get to this spot because this is a pattern that I recognize. JW, I don't know if you trade the ES, but if you do, dollars to donuts, that's exactly where you got in. And it was a pretty easy exit right at the mid band. Guys, this isn't a high probability trend trade. This is what happens when you're a chart reader. So that was a lot of words, right? Understand what you're looking at, and then that's going to allow you to understand what you're looking for. And then it's just repetition, guys. You have to know what you're looking for. So two things that you have to know before you get into the market is you have to know what are your rules for entry. What's it going to take to get me in? The second thing you have to know is what are my rules for exit? And guys, these two very key concepts, getting into the market at the correct spot and getting out when the market says that it's no longer your trade. Once you know those things, it becomes easier. But until you've got a little repetition, it's not the easiest, right? It's not the easiest to find an entry until you've seen it 50, 60 times. It's not always the easiest to understand the concepts in the first week. It's like drinking from a fire hose. So I created the KISS plan, and the KISS plan is a stepping stone in your learning journey. Guys, this is the plan that turns you into a chart reader. This takes those three very simple concepts, and from those concepts, you get an entry. This is not the end of the road for most of you guys. This is designed to optimize your chances of success with the high probability trend trade. And then that 50-50 trade that we talked about where areas have the potential to break. And if you keep it limited to this plan, give it 30 days. Through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That is an AI formulated way to say, guys, when you're a chart reader, you're going to see things beyond this plan. and you're going to formulate a plan that suits your needs. And it's all going to revolve around your chart reading. But until you're there, and here's my wife's favorite word. Let me share it with the room real quick. Give yourself a little bit of grace, ladies and gentlemen. You're brand new. Don't expect to be an expert in the first week or even in the first month. Don't think that you're going to have it all figured out on day 2 because you got lucky on simulator, right? Make it repeatable, repetition. Make it so that you can take the exact same entry every time so that you can have a realistic expectation about the results. And the high probability trend trade is one that produces 70 to 80% winners. So if you take it, not only do you expect to win 70 to 80% of the time, but you also expect to lose 20 to 30% of the time. That's a very key part to being a trader, is being okay with losing. But lose the right trades. Lose the trade that has a termination that reverses the market. Lose the trade with momentum, with a clear path, with an entry area. And what you're going to find is that you're going to get pretty confident as you become a chart reader because you probably are going to win more than you lose. And Ron just said it. When you know the high probability trend trade like the back of your hand, you will see other trades. Even trades you're not looking for. But the high probability trend trade teaches you how to look for advantages rather than trades. And guys, I've never had anybody use this high probability. Sure, we can do that. Why would you? But we can. Let me finish my little spiel and then we will. Guys, here is a high probability trend trade checklist. Whoops. This should be printed out. This should be put on your desktop. And you should police yourself every time you take a trade. You should say to yourself, do I have these advantages? If I do, I'm going to take an entry. Because nobody in the history of this checklist has done worse than 70% winners. I'm also giving you the exact same checklist with the visual. I talk about pictures a lot, ladies and gentlemen. What is a termination that creates a full reversal that gives me my rules met? Guys, that's a good top or bottom. There's a whole video dedicated to it. This is odds favorable momentum, and so is this. The look never changes. And this is weak triggers. That's a termination condition. That's the potential to break, and it's not broken until both triggers get through. And check it out. You would have sworn that that area was going to break, but it didn't. The market still reversed, and there was probably something on a smaller chart that told you get the heck out. So, and then there's your window of opportunity where the market is most likely to continue. Guys, as you learn the high probability trend trade, review that every morning. Look at it. Make sure you know what you're looking for. Line it up historically. And then once you're in the trade, guys, once you've defined your entry, once you know where the market is likely to continue, you've got to do something with it. You've got to manage it. I'm going to tell you right now, I'm not going to sugarcoat it. Management's harder than entries. Because when you're in a trade, you feel like you have something to lose. When you're in a trade, you're going to focus on tiny little fluctuations on a small chart. When you're in a trade, you're going to see your P&L go red, and you're going to crap your pants and then put a giant pleat in your chair from the puckering because you don't want to give it back. So practice management. Practice management. Keep it very mechanical in the beginning. The same way, take care, Gino. The same way you're so mechanical on your entries, be mechanical on your management at first. And this very simple basic management plan, and it's in the spreadsheet that I gave you guys, it all revolves around getting in where the market is most likely to continue. So if you try to be a trader before a chart reader and you can't get into the market where it's most likely to continue, well, then this management plan isn't going to do a lot of good for you. But if you are in the market where the market is most likely to continue, well, then you also know exactly where the market shouldn't go. And when you know that, the cool thing is that's where your stop goes. And it either gets hit or it doesn't. You either get stopped out or you don't. You either win or you lose. You're not in control of that. The only thing you're in control of is whether or not your rules were met. If you don't get stopped out and the market gives you a reversal bar, you're going to reduce your risk. You're not going to hope that it goes fast. You're not going to wish. You're not going to want. You're simply going to move your stop, and then you're going to roll back 6 feet from your desk, and you're going to say, whatever happens, happens. I'm not in control. And one of two things are going to happen. You're either going to get stopped out or it's going to hit that first target. And your first target's only $100 in the distance. And with momentum and a clear path and the perfect entry, it's almost hard not to hit this target. And once you hit that target, you're going to take all of the stress off and you're going to go break even. And once you're break even, you've got nothing to lose. You've got money in the bank. And it's either going to hit your second target or it's not, guys. But it's all if then. If the market hits my entry, I'm in. And there's nothing to do. If it gives me a reversal bar rather than stopping me out, then I'm going to reduce my risk and there's nothing to do. If it hits my first target, I'll go break even and there's nothing to do. And if I don't get stopped out break even and it hits my second target, then I'm out of the trade. I'm done. I just made $300. Guys, $300 a day is a $72,000 year. Let that sink in. Having the best trades, keeping it focused. Guys, that's your plan for success. The more opinions you make, the more difficult it becomes to be a trader. So keep it simple initially, guys. That's your high probability trend trade. I've also got a plan for the medium probability trend trade. Guys, that 50-50 trade, that one area not broken, this is the most lost trade out of all the trades that people take. And I'm going to show you why. Because when you have a 50-50 trade, it means that you don't have a clear path. And if you don't have a clear path, do you guys remember in the beginning what I said breaks areas? What's that one thing that breaks areas? Momentum. So if you sacrifice momentum, how can you expect the area to break? And then the same thing is true if you can't pinpoint where the market is most likely to continue and that window doesn't offer you the least amount of risk possible. Why on earth are you taking this trade, right? Because your advantages are gone. So this 50-50 trade, this is the best. Whoa, what did I do? This is the best of the best, guys, on the 50-50. This is the most advantageous, I love that word, way to take this trade. This is the one that gives you the best shot at winning. And it starts with odds favorable momentum on the 13-2. And notice that it says one area not broken. Guys, the more areas you're trying to break, the harder it becomes to break. So why not make it the best of the best in the beginning? One area not broken with momentum on the large chart, momentum on the small chart. And then it reminds you that divergence is a loss of momentum. So if there's divergence on the 5-1, it says, hey, don't take the trade. And then coming from one of those terminations that reversed the market is imperative on the 50-50. And if it isn't, there's no trade. And eventually you'll grow and you may change that. And then it says enter at the area. And then guys, before you ever get to management, it reminds you, hey, guess what? Divergence is the #1 killer of the 50-50 trade. Divergence is the reason more people lose the 50-50 trade. And then you have to manage it. And it's not a high probability trend trade, so your management's going to be different. And guys, I say this because you have to know what you're getting into so you know how to manage it. If you're taking a momentum style trade, then that's going to have its own management plan. If you're taking a high volume area trade, that's going to have its own management plan. The 50-50 trade is managed different than the high probability trend trade. And all of these, you have to know your plan. So simplicity in the beginning makes it easier to manage. You still use the window of opportunity. You still use the reversal bar. And look where it reminds you a third time. If divergence prints, get the hell out of the trade. I don't know how I can say that anymore, yet people still take this one and lose it all the time. $100 at the first target, or the first is your first target, or the first trouble spot. But Mark, what if my trouble spot's only $70 away? Well, then you have to make the decision if it's worth it for 70 bucks. Mark, what if it's only $20 away? Well, then do you really have room to make money? So you've got to go through this. You've got to be able to read your charts in a moment and know what you're getting into and where that first target is. And you're not holding for home runs on these medium probability trades, not initially. You're getting paid, you're getting out, you're making money. So guys, that KISS plan was dropped in the room. It's right in the chat box. The high probability trend trade checklist is in the room, is in the chat box. The one with pictures is in the room. Your chart reading 101, how to get to where you want to be the fastest, it's in the room. The slideshow that I gave you guys this morning, it is now in the room. I'm telling you, I'm going to give you everything that I own to make you success. The only thing that I can't give you guys, the only thing that I am incapable of sharing with you is experience. I can't give you repetition. I can't give you time in front of the market. That's up to you. But we've gone through the trigger line and the Fibonacci rules. And Rob, we're all like that. Everybody wants to be busy, right? And I was talking to D-Rock, and I hope you don't mind me putting your business out there. D-Rock and I were talking about trades that aren't the best trades, right? Those maybe trades, that attraction, right? Man, she's pretty, looks great in high heels. Maybe if I ignore the meth addiction, it can still be a good fit. And that's what being a trader is like. It's saying, gosh, it's almost right. Let me do it anyway because it beats being single, right? It beats sitting at home doing nothing. And you're going to lose a lot of those. You're going to give a lot of money away on trades that you shouldn't take. And that's part of the learning process. And I want you guys to be okay with the idea that you're going to give a lot away. But once you know your rules, it's easier to follow your rules. And once you simulate and you practice the correct rules, it's so much easier to follow your rules. And if it's simple, it's easier to follow your rules. And if you go back and do market replay, you can get that repetition. You can get that experience that I can't give you. You can get 2 days worth of experience every day. Fix your mistake, take pictures, bring them to the room. And that's really it, Rob. But the cool thing is it doesn't have to be hard. You just got to participate. You got to ask some questions. You got to put yourself out there. And you got to be okay if your rules aren't met. And you have to be okay if it's not the best of the best. And sorry, where D-Rock and I were saying is, can you meet your goals with the best trades? This is gold. And I'm going to scroll back. And we're just going to see what happened. That was the one where it's 100%. Where it's 100% best of the best. If you caught it on a 2-lot, your goals were met. And this is crude oil. And from a termination, actually, no, that was pretty because that was the short I was in this morning. No divergence, potential to break, perfect entry. And guys, I took this one down to the fib. I took this from 29 to 07. And that was just under $300. And that was it. Do you guys see it? Termination, reversal, odds favorable, potential to break, no divergence, strong triggers, tiny window of opportunity. Holy smokes. And down it goes. And I got out at the fib. I got out because I said all of my trigger lines are above this area of support. This is an area where the market may stop. My advantage is gone. And because my advantage is gone, I'm willing to exit the trade. But I knew where the market was likely to go because I'm a chart reader. I didn't hope that it went down. My indicators said that it should go down. My trade examples, oh, Michelle, they're just rules, right? I'll post them all. I don't mind. But what I do is going to have very little effect on what you do, ladies and gentlemen. Me understanding the looks will have very little effect on your ability to recognize the looks. But if you go back and you have odds favorable and you have the potential to break and you circle and you go back and you say, man, that wasn't perfect. I'm cool missing that one. And there's a 50-50 with the third divergence. And look how it pushed the market all the way back. And look at all the nonsense. And guys, people used to ask John, before John started that trading room, people used to ask John all the time, John, will you just trade live? I want to watch you trade live. Talking through the live market helps. It really does. But this is why I want you to post picks, because Rob, I can read my charts, right? Watch this. This is gold. That's a divergence high with absolutely no triggers through. That's a termination condition. My rules say don't go long. Rob, that took me 2 seconds. I don't have momentum. I don't have a clear path. And the hard part is I have to say, until I do, I don't have an entry. But now I have a clear path and I have weak triggers. But I do have an entry area, and now I have to say to myself, am I willing to take a medium probability trade, not a high probability trade because I don't have momentum? Can I take a medium probability trade? Woo, was there news? Order canceled. To try to get into this market. And that's what you have to be able to do, like at a moment's notice. You have to be able to read your indicators. And if you're just not sure, you have to post in the room. So guys, that's the first hour, the first half. We're going to go through and we're going to look at all your charts starting in the second hour. We're going to take pictures. I'm going to watch the live market. If I see rules met, guys, we'll take trades on the simulator together. But what I want you doing is, if you don't have a trade, man, my rules aren't met right now, let me scroll back and take a picture of a termination condition just to get that into my spreadsheet. And then I'll go right back. Oh man, there's still not. Let me take a picture of odds favorable momentum. Let me take a picture of what it means when the path is clear, and let me take a picture of what it means when the path is not. And guys, get that recognition in there. Did anyone else notice that 3 divergences in the same price range said things were bad? 1, 2, 3, third one's lower. Anything can happen. Straight out of the user guide. And that's the thing, Bob. And that's one of the reasons why I push pictures so much, because when I started trading, before I take break, you guys got me. I'm like a squirrel with a bunch of shiny things. When I first started, my brother used to use the phrase. When I first started, my brother used to use the phrase, it's obvious. Well, of course you're not going long here. It's obvious. You had multiple divergences. And I used to say to him, that's not obvious, John. I'm brand new. What's the pattern? What's the thought? What's the look? And guys, you can't leave anything to opinion. You can't leave anything to the idea that well, I'm just going to take for granted that this is what it is. You've got to go through and you got to create that recognition. And then once you do, then it becomes obvious. Nothing is obvious to the new user. Not the looks, not the patterns, not the entries. And when you're a brand new user, here comes my picture, my favorite picture ever. This is you right there. That is everything coming at you. You have 1,000 pictures in Photoshop. So Bob, with 1,000 pictures in Photoshop, thank you for saying that. And I'm not going to beat you up. I might a little bit, just kidding. But with 1,000 pictures in Photoshop, here's one of the things that you didn't get. You brought up, but Mark, the fib changed colors. Does that mean that it's broken? And that's okay, right? But in 1,000 pictures, you didn't take the very simple lesson that it's not broken until the small and the large. And Bob, I can't tell you how much I appreciate that you would say that in the room, because this is one of the biggest challenges that new users face, is believing that they understand the lesson and then removing themselves from the mentorship, from the coaching, believing that they have the lesson, and then going and messing up that lesson, trading in half-truths, if you will. And Bob, I did it as well. I did it all the time. And I think everybody does it, but not everybody comes back to class and says, you know what? That wasn't a clear path. Why did I have the expectation that the market was going to continue up? That wasn't a clear path. That wasn't a clear path, but that certainly was. So, Bob, There's a couple things that are so hard to do as a human. The first is to put your ego in check, to be okay with the idea that you're brand new, to be comfortable with the idea that you're a student. And I'm going to tell you right now, I'm about as warm and fuzzy as they come as we help you learn to do these things. And I say it every day. Every day I say, damn it, keep it simple. Keep it simple. Keep it focused. Keep it easy. Focus on the high probability trend trade. Become a chart reader. And everybody says, and not you, Bob, I'm not pointing this at you, but everybody says, Mark, I don't want to be a chart reader. I want to be a day trader. I don't want to learn the process. I want to make the money. And most people have. Bob, I lost $5,000 in 2 hours my first day going live ever. But think about it, especially you guys with experience, you guys with losses under your belt. What if you took those losses and turned them into lessons instead of just accepting them as losses? What if you took your challenges, presented them to someone that was good at reading charts, and say, how do I work through this? And guys, this is what I do. And I'm going to go back to this picture. I know Gino went to take a walk. I'm going to do Gino's whole run through before I take a break because I want you guys to see this. And you NASDAQ traders will identify with this. I'm going to open up all 4 links and we're going to go through them because Gino did the best thing you could ever do. He took them in chronological order. He said, Mark, I have odds favorable momentum and a clear path, and it's coming from a termination that created a full reversal. And Mark, I know in my heart of hearts, this is my absolute best look. And then he said, and I want you to see this, he had a limit order waiting. And then he said, wait a minute, I'm at the area and the small triggers are down and they're coming below the reversal bar. Guys, this is a NASDAQ specific interest. And this is it right here. And Gino says, I'm out, I'm done. And he didn't just walk away. Gino said, let's keep it on the education. He goes, a lot of times these hold. And I'm just going to see, are they really reliable? But I'm still not going to break my rule. And then he gave me the beautiful phrase, smashes through. And what he did is what he didn't do. And this is what I want you guys to get. He didn't take the trade. He didn't form an opinion. He didn't hope. He didn't wish. He didn't want. What he said is that my study, my chart reading, the feedback in class said that this is more likely to lose than win, and it does. And now I have trust. Now I believe in the idea that things aren't always perfect and my opinions aren't always right, but if I keep it pragmatic, if I keep it focused, if I focus on the rules and the advantages, I can avoid losers. And then when I avoid losers, the money that I make stays in my account. And I can't celebrate that one enough. I think that is such an outstanding look. And then when you become a chart reader, stuff like this happens. Mark, I noticed that it came all the way back to the mid-band and the large triggers didn't follow and nothing broke through the fibs to the bottom. And my gut is telling me that there might be a long trade here. Well, there aren't rules met, but because this person is a chart reader, they're automatically beginning to recognize when this is a termination condition, and they're automatically starting to create expectations that it should at least close the gap to the large triggers. And when it gets there and nothing slows down, eventually they're in a long trade somewhere right here and taking it up. And guys, this is the stuff that gets me giddy too, because this means that this person is so focused on their chart reading that they're starting to see opportunities outside of the high probability trend trade. So I sound like a broken record and I'm a total pain in the ass. I know that I am. But I'm doing it because I firmly believe that this is the greatest software ever. And if you take just a little bit of time to learn to read it, guys, you'll never have to go back to work. You'll pass this on to your children. You'll pass this on to your nieces and your nephews. And through simplicity, you can get to where you want to be. So, all right, I'm going to take a break. That was the longest first hour ever. And then when I come back, we're going to look at charts. We're going to watch the live market. We're going to do these things. But I'm going to tell you guys right now, the pressure is off of me. I've done everything that I am contracted to do. I have done everything. I have talked about rules, right? I have given you the path to success. I've reminded you that you're not in charge. I talked about everything that's on your charts. I talked about how to talk about your reads. We looked at the charts that you're supposed to use. And the only thing that I didn't give you today is repetition. So start simulating. Start practicing. Start taking pictures. If you take a picture of a termination condition, I want you to put it in the room. And if you choose not to put it in the room, well, then that's on you, guys. You're going to get out of this class what you put into this class. So make the decision right now. Say to yourself, you know what? I'm still in here lurking in the shadows because I'm not where I want to be. So let me try that Yahoo's crazy little plan for success and see if it works, because what I'm doing isn't. And it starts with simplicity. Guys, I'll be back in 5 minutes. Best dog ever. Yes, you are. You know what? I don't feel like taking a break today. Let's get to work, guys. All right, show of hands, crude oil traders. Who said, I hope support breaks, I'm going to go short? Anybody? Did anybody do it? Did anybody want to admit to doing it? I would have done it. Holy smokes, I would have done it. I would have said, man, divergent, smalls below the large. Oh, I think this should break. And you know what? I would have hid that picture from my brother, and I made that mistake 100 times. Guys, it happens. It's okay. Exactly, Pedro. Rules not met. Check it out. We never broke through here either, did we? Haji, you were asking, but Mark, what if they peek through? Shit, that's not breaking. That's just momentum. 3 divergences, right? It stinks to do nothing, guys. It's hard to do nothing. But nothing pays, especially when you know the patterns to get you in. So I'm going to scroll up to the top. We're going to start looking at pictures. Guys, if we get an opportunity, we'll take it on simulator just for the fun of it. I never tell you guys when to trade. I don't tell you what trades to take. I don't tell you what trades not to take. What I will do is I'll say, hey, look, the rules are met, right? The rules are met on this chart. And I'm going to activate a limit order. I'm going to see what happens. So, guys, this is from 4:20 a.m. Holy smokes. Here's an example of what happens when I trade when the brain is tired, sitting in front of the computer too long. Oh, amen. This was my question. Last night at 8:30 p.m. Mark, tomorrow can we run through this on the chart? Yeah. So let's talk about it. reviewing again this morning and answered my own question. No momentum on a large chart. Wait for rule number 1 not met. And guys, I'm going to tell you right now that I'm not scared to disagree with you. I'm not scared to disagree with you at all. So Jen, I disagree with you. You said no momentum on the large chart. And I say, let me give you my read. I say that this is definitely odds favorable momentum. But it's 1, 2, 3 areas that aren't broken yet. And it's also a bad top, which reduces the potential for a win on a 50-50. And it's also divergence on a 50-50, which reduces the potential of winning a 50-50. And it's also small triggers screaming against you on the NASDAQ, which reduces the likelihood of a win on a 50-50. So one of the things that people do as they become chart readers is they really try to focus on the rule that they're comfortable with, right? And then they let that be kind of the epicenter of what they're looking for. And you've got to be able to piece it together as a chart read. So Jen, you had the best momentum ever here. But momentum isn't enough. You didn't have a clear path. And sometimes not having a clear path isn't detrimental. And this is where the chart read comes in. A bad top makes this suck just a little bit more. Divergence messes it up even more. Strong small triggers against it just says, all right, Jen, forget it. Let's not do it. So you've got to piece it together. And I guess that the point I wanted to make is what you focused on was saying that that's not strong triggers. And that's the only thing that was good about this chart was the strong triggers. Does that make sense? So we start creating these ideas in our head and we start living out our own narrative. And it's important that you make sure that your narrative is accurate because it'll make life a lot easier. And then let's see what we have here. So there's that one. Area didn't break. And look at the push-up, right? And then it's weak triggers and a clear path. So are you willing to forego momentum? Actually, I'm not sure that was a clear path. The smalls are above. I mean, there's nothing good about this look. So you don't go short. And then check it out. Second higher divergence, odds favorable momentum, 50-50, no divergence, beautiful entry at support inside of favorable large triggers. And off you go to the races. And I think that this picture becomes so important because even though you couldn't do anything here, it's like a bus. Something's going to come along. And if you're patient and you wait for it all to come together, this is effortless. And this goes from 28 all the way to 58 before it stops, which is $600 worth of profit. So Jen, great job not taking the short. I think you did it for the wrong reasons initially, but now we had a great conversation about it. And then even better idea, better job, when everything rolls, the momentum is up, and now it's a 50-50, and there's no divergence, and the rules are met beautifully, and you didn't get caught at the mid-band outside of the triggers, you let it come back. And that's it. Go with the flow. Guys, your charts are like a lazy river. And when you go with the lazy river, life is easy. And if you fight the lazy river, you're going to get too exhausted to drink your pina colada. And that's really no fun. All right, Cav, let's see what you did. Cav. And see, this is where I'll respectfully disagree. You do have a strong trending market, Cav, but you're trading directly into multiple areas of resistance with no triggers through. And man, your smalls are inside of the large. It's a strong trending market. Take care, JW. I could live without this one. And it's just, man, there's a lot of hope there. I sure hope this trend doesn't end right into a termination condition, right? I hope that even though my triggers aren't outside of the large, I hope that even though I don't wait for a pullback, and hey, Farmies, nice to see you. And Cav knows me well enough to know that the only reason I say this is because chances are this one's going to lose more than it wins. And these are the ones that even though you got paid on it today, it may not be the best bet for your plan. So let me compound on that. Let me go back and let me see how often these areas stop the market. Let me see how often they create a bounce. Let me see how many times they ruin the party, even with odds favorable momentum. And then based on that, every now and then I'm going to get lucky, but is that the plan that I want? Do I want the plan that says, hey, let's get lucky enough? Or do I want the plan that says, man, this is repeatable, it's testable. This is something that I've seen 100 times and that I have a plan for taking. I have a plan for entry, I have a plan for exit, and I know that if I take this look 100 times, I'm going to win 70 or 80 of them. Does that make sense? Trading directly into termination conditions again. And Cav, that's the biggest shot in the foot you can ever give yourself. Man, it's a bad bottom and it's the gap theory and it's directly into fibs, but you know what? To hell with it. Let me take a long directly into this bullshit because it's simulator. Let me tell my brain that it's okay to do it. Let me take this trade where I can't find a freaking rule mat. And once that P&L is green, I know I'm a badass. And don't worry, I'm not teaching myself to do this. I would never do this in a live market. But you would, wouldn't you, Cav? Otherwise, you wouldn't be on simulator. And this gives you a false sense of security. And man, I'm sorry if that comes off as harsh. Guys, if you wouldn't do it with your own money, don't do it on simulator. You're teaching yourself. You're teaching yourself that this is okay, that there's money to be made on the gap theory from a bad bottom into fibs. And I'm telling you right now, if you want to take it all day long. But you don't get to pretend to be surprised when it kicks your ass 9 ways to Sunday. And I don't even know what that means, 9 ways to Sunday. Bob L. And we talked about this one, right? The fibs changing color isn't what means it's broken. Rather, it's the trigger lines breaking through. And then, Bob, one thing I want to point out is it looks like you gave me a 5-1 chart. And is that where we're looking for fibs? And this is an important lesson. You showed me a 5-1 chart and you're asking about areas being broken. Gold, yeah, it's that redhead, isn't it? So, Bob, I think the one thing that you forgot is that areas are defined on the large chart. And my only termination condition on a small chart is 3 divergences in the same location. So depending on what was happening on that large chart, this looks like a pullback to support inside of favorable large triggers, which is beautiful, right? That looks like an amazing trade. This looks like trading directly into a fib. This looks like trading directly into a fib. This looks like taking a trend trade when the fib has the potential to break. So you got paid on these. How often is that going to work? And then you followed rules and you jumped early, which is kind of funny. When you break rules, you hold long because you're relying on hope. When you follow rules, you don't want to give it back because what if it's not the right trade? Isn't that funny? Why I think the fib is more likely to break after the fact. And so let me see if I've got this right. It's okay, you're good. I don't know what you mean by after the fact, Matt. So let's go through the process of when a Fibonacci area is likely to hold. And that's when price reaches. And we're going to talk about this 27 fib. So when price hits it and the triggers haven't gone through, man, Matt, I have to do nothing. Because look how price hit it with all that strength here and it reverses. Do you see it right here too? And you're like, oh man, everything's so fast. Shoot, it bounced. So when price reaches and the triggers aren't through it, I'm cool just sitting on my hands doing nothing. When my small triggers get above the area, but my large triggers haven't, now it has the potential to break because of the momentum. Do you see how it's odds favorable momentum? The smalls are through, but the large are not. Matt, this is 50% of my triggers through, 50% not. These areas have the potential to break, but I don't consider them broken until both the small and the large get above trouble. Does that make sense? Does that help a little bit? So when I look at the live market, what I do is I say, well, my triggers aren't through. So when it hit it, it was a perfect termination. When the smalls kind of eke through, maybe, but 3 divergences on the small chart killed that for me. Does that help? Does that make sense? Let's go live market. Triggers never broke. That termination gave a reversal. Some of you might have taken a loss here on gold. Paul, is this the one you were talking about? What do you guys think? Termination, reversal, momentum, clear path, entry, son of a bitch. Pardon my French. Dag nabbit, I lost a trade. Did you lose that one too, Michelle? All right, help me out. Did you have odds favorable momentum? I know you do, Haji. Yes. Did you have a clear path? This is how I talk myself off of a ledge, guys. Were the large triggers a full bar away, Michelle? Because I know through the repetition of me saying the same darn thing every day, every morning, at almost the same time, that my mid-band is a termination condition if the large triggers are a full bar away. And if they're not, I couldn't care less. It's just a green line. So, Michelle, you had a clear path. You had odds favorable momentum. Here's the one thing that you didn't have. You didn't have favorable large triggers. So your correction point goes from the top to the bottom. You see how they're split? And I want everybody to see this. Split triggers. So it may go low, it may go high, and you did have areas here. But what does split triggers mean? And maybe we don't talk about this enough. What split triggers means is that these two aren't in sync. When they're one on top of the other, let's see if we can find a picture real quick. When these triggers are one on top of the other, when they're super tight, when they are, man, it's not going to give me one. When they're favorable, oh wow, look at that. It came right to it. Do you see the look here? You've got a little bit of momentum. It's not quite odds favorable. You have a pullback to a mid band with super tight focused triggers, and holy crap, it bounces right there. No worries, I'll be here. But when they're split, things become problematic. And guys, I talk about favorable large triggers at the beginning of every class as well, and I talk about them because this is where your advantages come in. And then Haji says he hates those split triggers. So what can we do when it's not perfect? We can wait for something. Wait for some sort of reversal bar, right? Let it give you some indication that it's going to do what it says it's going to do because my entry isn't perfect. Or you can sit on your hands. But we've talked about this a lot. So let's go through it. I've got odds favorable. I've got a clear path. And the reality is that I don't have any trouble in my way until about right here. If I wait for the reversal bar, life is pretty good, but it's outside, so maybe I don't take it, right? But eventually, it comes back and all the triggers are down and it's odds favorable and everything is going. And then it's super tight, one on top of the other. You have to believe that that's not the last trade that you'll ever take. You have to believe that there may be an opportunity. There may be an opportunity for you to get into this trade once everything is perfect. And guys, that's the hardest thing, isn't it? Is believing in your heart that another one's coming. Believing in your heart that it's okay to miss a trade. Believing that these patterns repeat themselves every day. And then guys, if we want to go one more level on top of that one, for you guys that took the loser, when it's not a good top, when my triggers break through the area, the mid-band is my first target. And my first target is where the market may create a little bit of a bounce. So why not let it be perfect right at that target? Throwing that out there. All right, so let's see what we got. Bob, talked about that. Ron got to second base. Exact same look. Holy smokes. Clear the area, room to the next, jump in with momentum, giddy up. Easy peasy. Clear the area, out at the area. Clear the area, out at the area. Trading beyond the areas instead of into the areas. I'm telling you guys, there's something to that. Something to that. Paul, let me see what you have here. You are, it's a strong trending market. You're putting all your faith in a mid-band with two divergences. Way outside, divergence. I hope that worked out. That's a tough look. That's just hoping that the trend in. You're on the wrong side of everything here. Divergence is printed. You're outside of the outer band. You don't have any areas inside of triggers. You've already gotten two divergences coming right off the fib. I see so much more wrong with that than I do see right. I hope it worked out for you. And then Ron, taking essentially the same trade, ride the mid-band until it doesn't work. And that's what Paul's doing here. Same thing. As long as you recognize that it's not high probability. And then don't like those split triggers. No idea where they'll go from. And three divergences and weak over here. And I like that, Paul. I like that you recognize that. And then Jen, up here, Mark, the small's through, but small's above price. Can you talk about this in terms of rules? Rule number 1 is met. Right, Jen? Am I missing something? Are you overthinking it? Whoops. Hold on. Hold on. We're going to do something here. I just want to know. I want to make sure. In terms of rules, Jen, tell me what rules are met from this one picture on the most current bar. Can you do that? Okay, so rule number 1 says that I must have strong triggers. Do I have it? Okay, rule number 2 says that when small and large are above the fib, I have a clear path. So rule number 2 is, what's a gap? No, that's not a gap. What does gap mean? You have a clear path. Gap is a termination condition. Yeah, okay, space between the two. We've already established that. You have momentum. You also have a clear path. So Jen, what's your job at that point? How about you take an entry at the area inside of favorable large triggers, understanding where the market is likely to continue, but also where the market is likely to stop. Pretty cool, right? Your small triggers are below the reversal bar marker. What about the small chart freaks you out? How many divergence does it take to kill a trade, Pedro? What is the only termination condition on a small chart? 3. 3 is the number. The number shall be 3. 2 is not enough, and 4 is right out. The number is 3. The number has always been 3. Every day the number is 3. Does that make sense? But this is the NASDAQ. So Jen, tell me what scared you. Why are you not in this trade right now? Something kept you from pulling the trigger. What was it? Because guys, this is what we have to dissect. If you can look at a chart and you can say to yourself, man, I can't find a reason not to be in this trade, then you have to ask yourself, what kept me out of the trade? But what was your thought? Not overthinking. That's too broad. Pedro says the smalls weren't a full bar away. Did you notice that, Jen? Did you notice that your smalls were below the reversal bar marker? Did you notice, remember, that Gino's smalls were below the reversal bar marker? Pedro, you got the gold star, brother. That's the only thing that would keep me out of a trade here. I don't care what color the small chart is. Your entry already happened and it's green as day, right? It is green as green could ever be when it hit a mid-band inside of favorable large triggers, Jen. You're 5 hours ahead of me. That was 9:37. Let me open up my NASDAQ chart because we're going to go back and we're going to see what happened. But Jen, you're missing the most basic, easiest, 100% repeatable thing in the world when you trade NASDAQ. And it's okay. You should be overthinking right now. But I'm going to show you something. When price reaches my area, my chart is still green. If my small triggers are below the reversal bar marker, I'm not taking that trade because more often than not, strong small triggers kill my party. If the small triggers are above the reversal bar marker, I'm in at the area because I have room back. Does that make sense? So you had odds favorable. You had a clear path. You only had 2 divergences. You had the perfect entry spot. But it was that one little NASDAQ nuance. And my suspicion is that you understood that you were thinking that you were in your head, you were saying, wait a minute, something doesn't look right, but I can't put my finger on it. Does that make sense? And then when you present it in the room, Jen, we get to identify it together and you get to say to yourself, I know that. How cool is that? So Matt, reversal bar marker, you'll have these on a large or a small chart. It's just a line and it lets you know where this bar becomes a reversal bar. So we use it in a couple different ways. For you guys on the S&P, for you guys, yeah, no worries, man, but let's talk about it. It's a big deal. For you guys trading like the S&P and crude oil and stuff like that, you're going to use it, Matt, on the large chart. When price accelerates away from those large triggers, hits a mid-band, hits fibs, hits one-to-ones, if your large triggers remain below the reversal bar marker, or if you're going the other way, they're above the reversal bar marker, it's likely to close the gap. And that's how we use it 99.9% of the time. If you're a NASDAQ trader, what happens is that the NASDAQ small chart is the large chart on every other market that we trade pretty much, which means that when the NASDAQ small triggers are coming down lower and closer than a full bar away, they're likely to continue in that direction. So when we look at your chart, Jen, I believe that was probably it. Right around 937. So let me go back and let me take a look at 937. And I want you to see something that you NASDAQ traders have got to pay attention to. Okay, well, that's a good one too, right after news. That's a good reason. But I want you to see this. And Jen, that's great. Cautious is great. But Pedro nailed it, right? Look at that. Not a full bar away, and it behaved as resistance. Behaved as resistance. And this little safeguard for you NASDAQ traders pays huge dividends. Pedro, awesome job on the recognition. And what it does is it just creates a little bit of an advantage for you guys that want to trade the NASDAQ. But Jen, everything was 100% perfect except the small triggers. So I know that I've got a lot of NASDAQ traders in here. Does everybody see this lesson? I'm telling you right now, guys, I blew out so many accounts fighting those small triggers, trying to trade the NASDAQ, these bigger charts like I would trade the smaller charts. So Jen, your large chart read was perfect. Your small chart read was perfect on any market except the NASDAQ. Nicely done. All right, let's see what's next. I don't know about you guys. This is fun for me. All right, Paul, let's see what you got. And then Michelle, if you're back and there's something I need to look at, let me know. Weak top, weak triggers, momentum phase, pulls right back to the large. I'm pretty sure that's the one that I circled and I said, I bet you JW's in it. Paul, beautiful. So does everybody remember what's the expectation when I have weak triggers with divergence and things roll? Where am I looking to get to? Does anybody remember this lesson? We've had it a lot lately. Oh, you're welcome, Jen. And I promise, guys, you don't have to thank me every time I help you. I'm going to be helping you until you don't need me anymore. We're in the momentum phase. The expectation is the mid band. Odds favorable, and really fast. My brother just sent me a Skype because the market is shit. Some days it's not a good one. That's funny. Beautiful, Paul. Beautiful, Paul. And this is JW's trade. The expectation that the mid band is the target. Odds favorable, no divergence. John just told me that there's not a lot of follow through in the NASDAQ. So guys, you have to be able to manage when it's not perfect. All right, Miss Jen, let's see what you did. Example of small and large through, sold there, full bar away, divergence prints, and you hang into it. Cool. Second divergence prints and you exit. Beautiful management. Beautiful management. Bad top, right? They're both in a coma. Guys, some days it's not good. Do you guys remember when we talked about news? That starting at noon, 2, 7, guys, there's all sorts of FOMC people talking. So Jen, that gap says, let's go with the area. Beautiful. And then sometimes, even for me, once I get here, I'll tighten up and I'll say, if it comes back, it's probably going to stop things out. And then I'll just go again when it's right. But great management. And this is a NASDAQ thing. If it hits those small triggers and the small triggers don't blink, it's probably going to keep going up for a little bit, even if it does close below them. You close back above them and they don't blink, it's probably going up a little bit. That's a NASDAQ pattern. That's not a crude oil pattern. Does that make sense, Jen? All right, Andy. 50-50, odds favorable, bad top. There were 3 divergences up there. So Andy, correct me if I'm wrong. Andy said it was a 50-50, but 3 divergences kind of confirmed the overrun, which gave me a 50-50 with the best momentum ever. And with this much momentum, he took the shot. He gets out. You broke your rules on the divergences, Andy. I just know your rules. You broke your rules, but you managed aggressively. And the fact that you recognize 3 divergences on the small chart confirming overrun on the large chart is brilliant. But guys, it's great. It's a 50-50. Your entry's in between. That's the only challenge I see. Huge split triggers. It's not a high probability trade. And it's the lower end of the medium probability. But you knew that, and you managed assertively. And I think that's such a plus. Smalls and large through, termination, 2 divergences. And Jen, 100%. Guys, if you're a NASDAQ trader, respecting those small swings. Because those small swings on the 34.5 are big swing 1-to-1s on any other chart. So Jen, I like it. You've got directly into it. You recognize it. Couple divergences. That was not in an area. This was your pullback to the area. And do you see how the small triggers are up strong? So many reasons to not give your money away on this one, Jen. And then if you wanted to take a shot, there's your first close below. Does that make sense? This is trouble. 2 divergences from trouble, says Jen. Go have a spot of tea, right? And then it's just not talking yourself into taking the wrong trade once the rules aren't met. Great read. And guys, I'm going to tell you right now, NASDAQ rules are not crude oil rules. Different animals. And then there's the same thing. Not sure what happened here. Pink 1-to-1s. Gino, I'm not sure if you're back from your walk. But pink 1-to-1s on a NASDAQ, 34.5, that's a termination condition. So you traded into a termination condition. And then Bob, let's see what you got. Termination. You traded directly into it. Bad top, support, no triggers through. And you said, I'm going to get completely nervous and take the wrong trade and exit for a couple ticks because I like to pay commissions. And I think it broke eventually, but didn't it dance a while, Bob? Beer o'clock. There you go. It danced there for a little bit. I don't need this stress in my life. That's just me. And you did. You traded into a termination. And then a divergence from a fib is even worse. It makes this even worse. And it's tough trade there. Gap. Yep. Just wait. Great read. Great chart read. It's okay to do nothing. Doesn't cost anything. And guys, I'm telling you, some days the market just sucks. And then there's that gap theory. And it's interesting. Gino, I hope you watch this later. I don't think he's in here. Is everybody gets at a different place at a different time. And I want to show a couple. This is a termination condition on this chart. This was a shot into the termination condition that doesn't work. This was no trade gap theory on one chart. This was a long trade that failed against the gap theory. And guys, you've got to get to the point to where you see it enough. But if you focus on the rules first, it becomes easier. Odds favorable. And then Paul, I don't know how gold reacts to these pink 1-to-1s. But what I do know is that when I get divergence from outside of the outer band, give me a freaking signal. And guys, one of the things that I'm really good at is recognizing patterns, not only patterns in the market, but I get really good at recognizing patterns in you, whether it's early entries, whether it's hopeful trades, whether it's breaking rules. I really do start to recognize these things in you. And Paul, I don't know if you're with the kids or what you're doing right now, but you guys that are using range charts, if you are outside of the outer bands, if you hit one-to-ones, if it gives you divergence, your best bet, honest to goodness, is wait for a signal off the top of the outer band. Because if you jump in early, it's going to probably run you over. And if you never get the signal, you never take the trade. But guys, range chart users, if I am outside of the outer band, it's exhausted. If I hit one-to-ones outside of the outer band, holy crap. If I hit one-to-ones outside of the outer band and divergence prints, come on. Why the hell are you trading a green squiggly line floating in the middle of nothing? Does that make sense? I hope. Paul, I hope you watch this later, because I've seen this one no less than 10 times from you in the last week or two. And that's a tough one. But it's an easy fix. It's an easy fix. You don't have areas inside of favorable large triggers, but that range chart told you, Paul, sit on your hands, wait. All right, Pedro, losing a little bit of momentum, but still great momentum. One divergence, perfect entry. You're in at 74. And you didn't take this pullback because of the resistance above. I like it. Nothing wrong with that. That one didn't get you. That one did get you. Looking for 90. If second divergence prints, you're going to get out. There's no divergence potential there, Pedro. This is one of those trades where it looks like this and the path is clear. Break even premature. If you're that scared about giving it back, Pedro, this is where taking $100 is gold. This is where taking $100 and then go break even, you might as well get paid. Why the hell would you give it all back? You called the perfect trade. You took the perfect entry. Get paid. If you're so nervous about it that you're going to go break even for absolutely no reason, right at an area of support inside of favorable large triggers with this look on the large chart. Oh, that's not break even. My bad. You're still way down here. Yeah. Perfect entry, but there's your stop. 69. Sorry, Pedro. I missed it down here. What's your plan for stop movement? So you're saying if it comes below the triggers, below the one-to-ones, and then you'll get out, right? Even though it already said the large chart was up, the large chart had momentum, the large chart had a clear path, and the market has already done everything it told you that it was going to do. Have you ever sat in my class where we say that it's okay to put your stop 2 ticks below the reversal bar going in the direction of your trade? Because what's freaking amazing, and I'm going to pull up the, I'm going to do this real quick. I want you to see this. I talk about this a lot. And I'm going to share this one more time. Your initial stop, and man, your plan can be your plan, but your initial stop is 4 to 5 ticks outside of the window of opportunity. And then once the market gives me a reversal bar in the direction of my trade, once it says, hey, Pedro, I'm doing everything I told you that I want it to do, I'm 2 ticks below it. And what this does for me, Pedro, and what it does for everybody, is if for some reason it doesn't work out, if for some reason that market doesn't do what it was going to do, then I am literally 3 to 4 ticks of risk. That's it, 3 to 4 ticks of risk, rather than keeping $280 worth of risk. Does that make sense? So your initial stop, I love it, but look at your large chart. if it comes to your stop at 60, it is on the wrong side of the smalls. It's on the wrong side of the large. It's already made a reversal bar, and it's working on making its second reversal bar. Does that sound like a good stop placement? Does it make more sense to risk 3 ticks? And if it does pull all the way back here, well, I'll consider a re-entry instead of giving up $280 on it. Does that make sense, Pedro? This is one of those things where it's already done everything it's told you that it's going to do. And if you were waiting for a second divergence to get out, that is 2 ticks below this reversal bar marker right there. That's where divergence is going to be true. So you can eliminate the need for killer reaction time in case it goes fast. Does that make sense? Because I feel like this is a beautiful trade with a lot of potential, but you're leaving a lot on the table. And this is an easy way to turn winners into losers. Well, where it shouldn't go initially is outside of the window. And then once it says it's doing everything, it's 2 ticks below. And again, right here, did it make it 74? It made it to 84. That was your $100 right there. And then keep a couple ticks on it. But there's a difference between giving it room and hoping that it works, right? So let me do this real quick. And this helped me a lot. My brother did this for me. So I hope this helps you. If the market is here, and let me take this off. Is this where you want to enter a trade? Right? Like if you're that far below the large, if you're that far below the smalls, if the smalls are returning to the large, if you're below the reversal bar marker, do you really want to be in it that long? That may be too much room. And guys, you're so good. You're so good at pinpointing entries. You did such an amazing job of getting in where the market is likely to continue. Get outside of those triggers, couple ticks below, right? And if they come get you, who cares? We'll look for a shot to get back in if it's still appropriate. But it's always better to lose $30 or $40 than $300 because you're hoping that being that far on the wrong side of everything is still a great spot. I hope that makes sense. I hope that's helpful. Well, you have to do whatever your plan says, but I can tell you from 3.5 years of giving this plan away that, wrong one, hold on. That your first stop movement, 2 ticks below or above the reversal bar in the direction of the trade, this one has been proven to be a pretty good stop. So maybe try it. See if it works for you. Do it on simulator. Work that through and see how it works out. But when you're taking the perfect trades like you do, Pedro, it's appropriate. It makes sense. That's not a stop that's too tight. That's a stop that they can hit me and I won't feel bad about it. Not even a little bit. And then there's those split triggers again. A great entry, Pedro. Absolutely perfect entry. Next. And that's that correction point again. When they start to split like this, and you know what's interesting is, hold on. Let me see if I can find it. You guys forget that I remember everything, right? And it's a pain in the butt. Hold on. Don't like these split triggers over here. No idea where they'll go from. Don't mind them here because it's been a while since I took a trade. We saw something like this the other day as well, where 2 divergences was an exit, but 2 divergences wasn't enough to keep somebody out of a trade. Either love them or hate them, but be consistent. Be consistent, guys. And annotation lets you know when you're changing your mind about looks, when your rules become opinions. And this is the same one. I think everybody took it. Thought the 1-to-1s would help hold for a push down. Maybe large trigs too far from the smalls on the 13 too. It's just split triggers. Who was this? This was Michelle. So we talked about it, right? Did you get your lesson out of that, Michelle? Split triggers, correction points, bad top, mid bands first bounce point, let it be perfect, maybe wait for confirmation. There's a lot in there. There's a lot in there. Guys, I don't care for split triggers personally. I'm not a fan. It has to be the most beautiful ever. You too, I saw that, Andy. You weren't here for your review, were you? Andy, I'm not sure. If you want to repost it, we'll talk about it again. Now that you're back in the room, I'm almost to the bottom of the pictures here, guys. D-Rock, I know you don't like almost trades. It doesn't matter what I like, D-Rock. I prefer brunettes. That doesn't mean that there's anything wrong with a blonde. It's just what I prefer. I'm going to show you really taking strong momentum on all three charts to heart now. Had your order 2 ticks below the yellow 1-to-1s. Just missed it. Learning the hard way. So let's see what you had. And guys, I can't stress it enough. It doesn't matter what I like. It's not about me. Everything was strong, and you said all I need is a pullback, and it didn't give it to you. Hey, D-Rock, that's about the best look you've shown me in a while. All day long. It just didn't give it to you. That's what sucks, is when you're patient and it doesn't set up, right? Can you find anything wrong with this? Termination, full reversal, odds favorable, smalls through the 1-to-1, odds favorable. I mean, my goodness, just give me a pullback. And it didn't. Those sons of guns. You're still having issues with your live market charts linking while in the trade. Grant, are you with me in here? So check it out, Grant. If I have this one on sim, or if I put this one on live and that one on sim, I have to have these on the same account. That's the first thing, is they have to be on the same account. If they're on different accounts, because a lot of times everybody leaves their large chart on sim and they only put this one on like their apex or something, right? But what happens, and I'm going to do it the other way around because I'm not going to take a trade on my apex like this. What happens is if I go short here, it doesn't show up over here. But if I change this to sim, now it does. And I think that may be what's getting you. You just have to make sure that they're lined up, that they both have the same thing. And then the same is true if you need to plot, make sure that you right-click on whichever chart isn't showing it and go to data series, or data series if you like, and then plot your text and markers, and then it'll show up on the large chart as well. I tend to not plot on my large chart because I can see it on my small chart. Cool. And my OCD goes a little crazy. So hopefully that helps. And then Andy, so the one thing that I gave you right off the bat, Andy, that I was really impressed with is that it was a 50-50 on the large chart, but 3 divergences on the small chart said that that was probably just a little overrun and wasn't going to work. So great chart read there. Odds favorable momentum is absolutely beautiful. Split triggers, 3 divergences, weak triggers. Lot wrong going on. That was 2 divergences. No areas inside. You're hoping that a mid-band holds. You were aggressive with your exits, especially on gold, man. That's a tough one. And we've seen a lot of people getting those split trigger blues on gold. But the large chart's perfect. Let's go with that. The large chart is perfect. So you did the right order of operations there. You fudged on your rules a little bit on the small chart, but you managed aggressively, and there's nothing wrong with that. Support broken, increasing momentum, clear path, no divergence, strong triggers, perfect entry. And then again, the only thing that I could even say about this, Pedro, is you're in perfect. You're in at 0850. I think if the market gets up here to 10 or so, that's probably where it shouldn't go. Wouldn't you agree? If this trade's going to work, it shouldn't blow up through those triggers. It shouldn't blow up past those areas. It shouldn't get to the wrong side of everything. Does that make sense, Pedro? And I'm all for, give it like 5 or 6 ticks above the top of the trigger lines. So that puts you, yeah, probably 10.5-ish, something like that. And it's okay. Keep it where it feels comfortable initially. And maybe where it feels comfortable, drop it a tick. See how it goes. Those ticks add up. But I think it's a great look, man. It's a great one. Still snowing in Vermont? Ugh, have fun. Muser, have a good one, man. Hey, let's see some charts from you. I know you're coming back and you want to learn. Let's see what you're doing. Entry logic was perfect, Pedro. Everything about it. I can't find anything wrong with this chart. Mid-band's behaving as a termination. Everything clears. Odds favorable. No divergence. Strong triggers. Perfect entry. It just didn't work. It's one of those costs of doing business. Pedro, I would lose this trade with you all day long. All day long. Wouldn't hesitate to lose that trade with you. And I think that goes for everybody in this class that understands the rules of a high probability trend trader. This is one that if you take it 10 times, it's likely to win 7 or 8 of them. Nicely done. It's perfect. Haji. Hateful split widening. That may be my favorite description ever. Hateful split widening. So Haji, let's go through it. This is perfect. And let's start with that. Most importantly. Oh, I need to get rid of that one. Large chart's perfect. I've got a term that reverses. I've got odds favorable momentum. I've got a clear path. I've got sunshine and rainbows. I couldn't ask for anything more on the large chart. This is the stuff that I dream about when I dream about high probability trend trades. And then I come over here and I'm like, God bless it, my triggers are split. So I draw the line, Haji, and I say to myself, I don't have any areas here, and I've only got one area here. And the top of my correction point is here. This is the Russell. So Haji, do you see how you can use the rules of finding your window of opportunity? Whoops. And if your large chart is perfect and your small chart has one line inside of favorable large triggers, it sure makes sense to take it from that line, doesn't it? And what you run into, guys, on these split triggers is if there's a line here, right? Or maybe this chart isn't perfect, and it's no guarantee that it's going to work, but at least you've got one place where it's supposed to bounce. You've got your risk established, and you can work through it like that. Haji, I love this trade. I love your entry, and I love that you took some off at the trouble spot. And then at that point, man, just take them both. right? Like it's one thing to have it break through and then put a stop right at the trouble spot, but don't we expect trouble spots to create at least a little bit of a bounce, even if it's 1 bar's worth of bounce? Like we expect to see some reaction on the small chart. So either commit, take it off, or, that's up to you. That's something that you have to work through. You heard order canceled, panicked, and closed. Well, that's okay then. That happens. Good stuff. Woo. Great question, Matt. And Matt, let me tell you right now, it doesn't matter what I prefer. Does not matter what I prefer. But we're going to do something real quick. And I think you're going to dig this. I think you're going to be pretty happy with this conversation because this is a pretty powerful question that gets asked a lot. Let me replace that one because I really want to zoom this in. I want you to see this. So there's a couple things going on here on the large chart. You've got a good bottom. I love that. And that good bottom increases the likelihood of the things breaking above it. It really does. So this fib, Matt, I want you to ask yourself every time you look at a fib, every time you look at a divergence highline, every time you look at a 1-to-1, did price reach the area? And here's the cool thing, Matt. If you ask yourself that question every time, because the recipe for a termination condition is for resistance. If price reaches resistance and triggers remain below, it's a termination condition. So if you get in the habit of saying, oh crap, I see these red fibs, but price didn't reach any of them, did it? Which means that decision-making process wasn't set off, which means honestly, if you can get through this termination condition because price reached the divergence high and the triggers remain below, well then that's a target, and that's a target, and that's a target. And the difference between a termination condition and a target is whether or not price reaches it. And I'm going to show you a pretty cool picture that illustrates that. Yeah, then you viewed it perfectly. Let me find it real quick. And one of the things that we see a lot, and I want to show this one because this is a pretty good example, and it's that new user mindset, right? You know that terminations are bad, so you start thinking about them. And when you see this divergence high in the distance, your brain says, dude, Matt, you've only got $60 to get to that one, man. That's not a good trade. There's no money to be made. And then your rules brain says, we trade pullbacks. That's $300. Go, Matt, go. And that's a target, right? And then when price reaches it, cha-ching. But because price hasn't reached the area, we are full tilt biggie looking for pullbacks to support inside of favorable large triggers. And that profit potential grows exponentially through the pullback. Does that make sense, Matt? And I know that when you ask a simple question, I go into these lengthy answers. But look at you, perfect entry. Right at the area inside of favorable large triggers. But it is a 50-50, and it is into a termination. So you have to be willing to exit if things go south because the areas aren't broken yet. And I like that you say compressed triggers. I may steal that one. Compressed. Diamonds are compressed. Everybody loves diamonds. Great trade, Matt. Termination, full reversal, perfect entry. And then one of the things that's cool is the small triggers were a full bar away. NASDAQ's a freaking beast to trade for new users. And when I get to these small triggers and it can't break, I take some money and I get to break even. And I'm willing to re-enter if need be. And then at this point, you're getting above the smalls. Your risk is established. Your target is there. Beautiful. Great trade, dude. And then there's your trade right there. And off it goes. And it never blinked, did it? So nice. Oh, damn it. Termination condition. That was a 50-50 with 3 divergences. And the large never got through. And this was ugly. Did anyone say, wait, I think it's going to break? That's not smashed, is it, guys? That's peaked. Rules are designed to keep you safe. And as long as you know what kind of trade you're entering, you know how to manage it. But until you can do it in the moment, guys, keep it simple. Keep it focused. Let it be the best of the best. Let it be amazing. Let it be advantageous. That's for you, Andy. Let it be the kind of trade that you feel good risking your money on. What do you guys want to talk about? I feel like I've been long-winded enough, right? I've given you guys everything that I know how to give you here. Jen says, I've got one for you, Mark. Beautiful. Jen notices I've been working out. I've got a strong bottom. And that's the precursor to the easiest trades. And from that strong bottom, it's the exact same trade. Thanks, Cav. It's been a good day. It's a 50-50 for her in her British time frame. But it's a 50-50 with no divergence, strong triggers. Small's a full bar away. I can't find anything wrong with this trade. Try as I might. And you guys know that the only joy I get in life is beating you up. So when I don't get the opportunity, I find it a little aggravating. Take care, Cav. Pretty awesome. How did it feel? Matt, I know you're still relatively new, but when you have advantages and you can physically see them, does it make it easier to take the trade? Jen, when you see that strong bottom, 3 divergences, odds favorable, does it make it easier to take the trade? You've been waiting for that one? So you didn't take all of this crap and you waited for the best and just made money? Virtual hug coming all the way across the world to you. High five. Good. Embrace it. Remember how good it feels. And repeat it every day. Man, Bob, I hope it doesn't feel like getting beat up too much. I really do. I worry about that some days. My brother had a gift. He would beat you into oblivion. But you'd be better for it. I don't learn like that. I don't do well with beat ups. I do better with attaboys. Yeah, but if it ever feels like I'm kicking your ass and you think it's unnecessary, send me a message and go, dude, you got to lay off. It won't hurt my feelings, and I'll actually appreciate it very much. All right, let's see. 3 divergences, termination, things are rolling, bad top, momentum here, momentum there, not quite here. I'm a worrier, Paul. It's what I do. It's what I do. I spent 30 years in the service industry, guys. I spent 30 years making sure people were having a good time. So it's definitely second nature. It's what I do. It's what I enjoy doing. I'd rather lift you up than beat you down, but sometimes you got to get knocked down a level so you can be lifted up. I realize that. I do too. I usually knock myself down. All right, so we're getting to the point then. Nobody seems to have a question. 15 years has been funny. It's a different world, Termy. I was a bartender for 20 years, put myself through college, all that good stuff, bartending. And then I became a manager. I made it all the way up to GM, had my own restaurant. And then my second spine fusion took me out. I did nightclubs when I was young. Um, I like to go to bed at 9:30 now. I would never survive the nightclub world. But it's a different world where you get good at drinking. That's for sure. So, guys, let's do one thing and then we'll call it a day. I haven't shared this one in a while, so let's just talk about it. 6 signs you know that you're maturing as a trader. I love this one because for me, there's a lot of identification with it. Thank you. Thank you, Paul. The first one is that you manage risk and then you manage reward. And this should strike a chord with everybody in this room because you guys do an amazing job of managing risk before you ever even enter a trade. And you do it by insisting on momentum, and you do it by having that clear path. And you manage your risk by getting in at the right spot. Gosh, Pedro showed you a beautiful example of that. And then once you're in, then you manage rewards. You were a DJ in the 80s, Ron? Back when ecstasy was legal. Ron doesn't remember any of that. He's only seen pictures. Guys, number 2 is that you're completely relaxed when you're taking trades. And this is one of those things where you start saying to yourself, those sons of guns are going to have to come get me. I'm not going to move my stop. This is the right trade. I'm okay through these little 5-1 fluctuations. It's the right trade. I know that my rules are met. I know that the advantages are there. And you really will. You'll get relaxed, guys. Your palms stop sweating and your heart stops beating out of your chest. And then you find that you don't force or chase trades, right? I know the rules aren't met, but I know that I don't have momentum, but I know the path isn't clear, except. Do you guys ever use those keywords when you annotate your charts that remind you that you're breaking your rules? And people do that. And when you force trades, guys, when you try to make the market do what you want to do instead of doing what the market's telling you that it can do, it becomes difficult. And then trading isn't your daily adrenaline fix. I get it. I raise the pulse. I'm pretty exciting. But don't let trading do it, guys. Go swim with sharks or jump out of planes or have Ron tell you stories about the 60s. Trading doesn't have to be. Doesn't have to be adrenaline. There should be the exact opposite, right? You catch yourself saying, hold on, thank you. Catch yourself these days after you said stop sending me photos of your butt. I said it to everybody. When people write on their charts and they say not a clear path but, once you say but, you're breaking your rules, right? And I am an HR nightmare, Jen. When Nexgen expands and does this funding company, I'm going to have to figure out how to clean it up, I'm sure. But it works, and you remember it, don't you? You remember, don't show the butt. Don't let my butt be a part of this, and it works. Following your trading plan, guys, this is the biggest one, I think. And this is the hardest thing to do for most people. When you refuse to take a trade because your rules aren't met, you're maturing a lot. You get it, Haji, when you write on your chart, didn't have odds favorable momentum, but the triggers were split, but I had 2 divergences on a 50-50, but guys, don't show your butt. Following a trading plan. You know, I had one of these guys, and you guys have probably seen him over in Traders Chat, and he's successful a lot. And he just said, hey, if you don't have a written plan, you don't have a plan. And if you don't have a written plan, well, then you're really leaving the door open for emotion, for wishing, for wanting, for hoping, for opinion. And that's a horrible way to trade, guys, because our emotions will kill us. And then my favorite one, because I am kind of a hippie, is that your worth as a trader and your worth as a person are 2 separate things. Traders will beat themselves up to no end. They'll call themselves names. They'll say that what they're doing is stupid. Treat yourself like you're a 4-year-old that's learning to do something new. You'd never tell your kid, "Ah, you dumbass, you call that a finger painting," right? Because who does that? So you've got to treat yourself. You've got to let yourself. It's got to be okay to be wrong. It's got to be okay to make mistakes. It's got to be okay to be new. Um, and then let's go back and let's read this, and then let me kick everybody out of the room. Learning to trade at a high level goes beyond simply making money. And you realize this the more you spend in the markets, guys. It involves understanding which indicator patterns can be executed confidently, which comes through trading both winning and losing trades. Embrace the learning process. Don't fear losses. As long as you share your trade outcomes in class to promote growth and prevent repeating mistakes, keep your focus on consistency and achieving successful results through your efforts. And Nexgen emphasizes that new traders should complete their education using the simulator and market replay. Many traders make the mistake of testing their trading rules and emotional control skills too early with real money. We've all done it. Without a winning mindset, trading with an incomplete or poorly developed plan often leads to avoidable losses and frustration. Nexgen provides all the necessary tools to avoid these pitfalls. Everyone can win, but thinking and acting like a winner requires a conscious choice. Nextgen's technical patterns provide a statistical advantage. Your mindset and execution of those advantages will determine your success. John Novak, CEO, developer, big brother of Nexgen Fibonacci software, had valuable discussions with trading coach Mark Douglas while focused on the psychology of traders in the early 2000s. He and Mark Douglas used to call each other all the time. He spent a lot of time working with Mark Douglas. And the time spent with him influenced the Nexgen study ideas. The ideas that it's execution, not results, all that good stuff. Tracking performance based on a sample, 20 to 25 trades. By focusing on high probability trend trades after Fibonacci-based solid top or bottom, you can master Nexgen's trading concepts with each sample of size of trades. Active participation in class and educator feedback will help you avoid mistakes and enhance your learning. Does it sound familiar? John Novak believes that a deep understanding of your technical analysis advantages, chart reading, and consistently executing the correct trades will positively influence your trading psychology. Doesn't that make sense, guys? That confidence comes through the memory of success. And if you find yourself trading with fear, anger, frustration, or seeking revenge, it's crucial to stop trading. Refocus on the highest probability trades and your management rules. And here's the last thing that we're going to say today, guys. There is no shame in returning to the simulator to rebuild confidence in your trading plan when necessary. And guys, search for Mark Douglas on YouTube. And I think that if you go to the video section, maybe not, maybe it is the home section, but I believe, no, he didn't. He had to take him down. And trading in the zone is amazing, Matt. Trading in the zone is amazing. One of my favorite reads lately, I'm going to tell you guys right now, I've read this one about 4 times now, is Emotion-Free Trading. Guys, there's the PDF in the room. Outstanding read. 7 Habits of Highly Successful Traders. Outstanding read. And they're not long reads. They're not tough reads at all. So those are